Okay, I think we're live now. Wait for YouTube to send me my notification. Unless somebody in the comments says we hear you. Let's see if I can set this up a little better. If the background looks a little different, it's because I have a new Mac over there, so I have to slide this one down. So if the angle looks different, that's why. I imagine I'm live. Although I'm not. There it is. There's my confirmation. I'm live. Okay, let's go. Please explain Nietzsche's concept of camel stage. Is it bad phase to be in when developing a character? No, it's actually a necessary stage. You have to. Think about it this way. You can't possibly know what your belief system is until you explore different belief systems. So you explore whatever ethical or justice theories that are written by somebody else. In other words, you're taking them upon yourself. You're loading yourself up with the knowledge that exists out there that has been collected in different sources, whether it be from philosophy, whether it be from religion, whether it be from social norms, but you're taking all this upon you and you're trying to be a good person within the structures of what is being given to you. That's the point. It is being given to you. You haven't arrived at it on your own. Now, you may look at some of these philosophies and some of these ethical frameworks and say, well, I do agree with that. I'm fully on board. The danger in the camel stage is that you are taking upon yourself the beliefs of other people who may have had motives in keeping you down, perhaps. This is what he talks about with Christianity, is that it is a morality of the weak, to keep the strong down, that there are actions that you would take that would be considered immoral within certain ethical frameworks or certain justice frameworks, but you haven't decided that. You just accepted it. And it's only after you've lived a while that you can then look at some of these things and say, really? And then you move into the next stage, which is the lion, where you cast all these things off and you find what it is that is more true to you. And that does not mean, when I say you cast these things off, that you turn into a self-centered, egocentric, evil person. It could be, very well could be, that you come to one of these ethical principles in Christianity or in any other religion or in philosophy, and you say, no, I do believe that. I do think it's important to be a good person. I do think it's important to be a provider. I do think it's important to support other people in society. Well, then great. You've come to that yourself. It wasn't given to you. You're not a camel being loaded up with other people's ideology. But you cannot, I think, get to the lion stage without going through the camel stage for some period of time, right? Most people never leave that stage. So it's not that it's a bad stage. It's a necessary stage. You must go through it. Let's say a grocery shop has a margin of 25% on all items. Owner buys everything legally on bill, but every day he takes out 7% of sale in cash. Is it possible for the government to catch him legally? Well, there's always shoplifting. I mean, 7%. You can always argue away 7%. You can always defend yourself against 7%. The danger is bringing that 7% into the system. How are you going to get that done? So when you report your taxes, if you have investments, you fill out these forms and these schedules with your ending balances in and all of that year to year. They can see that. Then you have your income. You have your income, your expenses, your net income, your taxes. So they know how much money you have left over, and they can see the balances in your account at the end of the year, and they see how much you earned on that account during the course of the year. So they know what your potential for contributing to your financial assets are. So if you decide that you're going to take that extra 7% and say, well, I'm just going to put it in my investment account, where'd you get it? Right? Where'd you get this? Where'd you get this money? It doesn't add up. The balance you have at the end of the year, based on what the balance was at the end of last year, all of the T3s, T5s, T50, 308, all of the schedules you filled out, plus what your net was, doesn't get you to that number. So yeah, you can make cash money. Getting it into the system is where people get caught. Not making it. Not making it is where they get caught. Bringing it into the system is where they get caught. So if you get audited and you have a certain net income and your assets are growing at a certain rate, but you're living a lifestyle that this doesn't add up. Where are you getting the money? That's where people get caught. So when you doing cash business, you have to keep your cash aside. You can't bring that into a bank account. You can't put it in an investment account. So it's losing money every year through inflation. It's going to lose money through inflation, period. You can't bring it into the system. To bring it into the system, you have to have some legal way of bringing it into the system. You have to launder that money into the system. If you're only doing 7%, and it's 20 grand a year, let's say, chances are you can slip under the radar for a long period of time. I wouldn't talk about it or post stuff online about it. But if you're in the millions, if the money that you're trying to hide is 4, 5, 600,000 a year, how are you going to bring that into the system? That money's going to underperform, and that money's going to evaporate over time. Inflation is going to evaporate that away. How are you going to bring that into the system to make a return on it? What are you going to buy? What asset are you going to buy? Where'd you get the money for that asset? Right? You can't buy any asset with it because you have to report it. So you have to find a way to get it into the system. A good way to get it into the system is to put that money into Bitcoin, create an NFT, and buy an NFT from yourself, from some unnamed wallet. You buy it from yourself, and then you bring that money in the system, and you have a capital gain from creating an NFT. That's the whole point of the NFT business, is to launder money back into the system by drawing a little picture and saying, look, you can have a digital picture of this. Give me $40,000, and in it goes. The digital thing is useless. It's to launder money, right? But you're going to have to find a way to bring it back into the system. That's where people get caught, is bringing it into the system, not making the cash. It's hard to catch you making cash. It's easy to catch you living a lifestyle you can't afford, and it's easy to catch you bringing it into the system to earn a return on it somehow. That's the problem. Let's see. I trade Indian market, bear bull condors, giving 1 to 5, 1 to 8 risk reward ratio. Is it normal? I don't know. I've never traded the Indian market, and I don't trade complex setups like that. I don't. If I do, you're legging into that over time, but I don't think I would ever start with a complex trade like that. Is it normal? Yeah, so I don't know. 10 companies in the world sell vanilla milk. 11th comes in and sells chocolate milk. People will either buy vanilla or chocolate milk, and some will buy vanilla and chocolate. The vanilla people have showed yet they can make. The vanilla people haven't showed yet they can make chocolate milk profitably. The chocolate milk company takes some market share away. It seems like the vanilla milk people are in danger versus the chocolate milk because they can't make chocolate milk profitably yet, and more people are switching to chocolate milk over time. That's a long one here. The vanilla milk companies will cannibalize their sales if they start to sell more chocolate milk. Seems like the innovator's dilemma. So you just need some creativity. You're saying that I'm a vanilla milk company and I'm having trouble making chocolate milk. So I think, why the hell should I make chocolate milk? Let me just make a hybrid vanilla milk. I'll make chocolate syrup, and here's the chocolate syrup, and you buy my vanilla milk, and you can make chocolate milk anytime you want. I continue to sell my vanilla milk because, well, that's where the biggest market is. I mean, if you go to the grocery store, chocolate milk is what, 6% of sales. Vanilla milk is the rest. But you can, rather than have chocolate milk in your fridge and say, I don't know how often I'll use chocolate milk. Why not have vanilla milk and have chocolate milk syrup? And then you can make the chocolate milk anytime you want. So I would use a hybrid solution to get you there, which still capitalizes on my strength. You only have chocolate milk. You can't make vanilla milk, right? So you're a novelty at this point. I know what you're trying to do with that example. So that's what I would do, is I would say, let's do a hybrid. Not only that, I could make the argument very easily that if all the vanilla milk people rushed into the chocolate milk space, it would push the price of cocoa beans so high that nobody could afford chocolate milk. You would hit a wall of supply at some point, that it simply cannot be done with everybody trying to make chocolate milk. The second problem with that analogy is, am I being forced to make chocolate milk? Is the market being forced to buy chocolate milk? Right? Is there a penalty for making vanilla milk? That would add a little bit more to that. And if the 10 companies who make vanilla milk started making chocolate milk, it doesn't matter if the chocolate milk company is profitable. They won't be profitable if everybody's making chocolate milk. They're only profitable because nobody else is making chocolate milk. Even if the 10 make chocolate milk at a loss and the 11th makes chocolate milk at a profit, that margin that they're making a profit on will disappear, and they'll all be making chocolate milk at a loss. It's not much of a dilemma overall. Tesla trade on the psychology of the retail trader being almost cult-like. Would it not be better to look for something else rather than playing retail traders? Yeah, I agree. But if you were going to play Tesla, you trading the fundamentals, I think at this point, from what I've seen in the last 5-6 weeks, trading the fundamentals is a loser's game, I think, because the people responsible for pushing the price up, those that are buying the shares, buying the calls, don't really care. Don't really care about the fundamentals. So the fundamentals don't, in this case, they truly don't matter. So if you have a group of people who are absolutely willing to believe, you may as well trade the people who are willing to believe. The reason I bring that up is, let's say that the S&P 500 is your benchmark and you're a fund manager. You got no choice. You can ignore Tesla, but you have no choice. You pretty much have to hold it. And if you do have to hold it, you know it's overvalued, but what can you do? You're not going to underweight it because you're going to underperform. So you're going to have to equal weight it at the very least. But why not overweight it, lean into it, and just tell people it's worth a hell of a lot more? Because the shareholder is more retail based, more likely to gamble with it than invest, less likely to pay attention to the fundamentals, and more likely to, well, I guess you'd say, date the stock. I mean, Robinhood is more like a dating app for stocks than it is an investment platform, it seems. So, everyone's swiping right on that one. Did I get that right? You swipe right? Is it? I don't know. I don't use these things, but I've I'm aware of the culture. You swipe right, swipe left. You wouldn't swipe left. You'd swipe right, because if you swipe lefties, was it Christianity used to say, if you're friends with a lefty, you're going straight to hell. And so, yeah, you'd probably swipe right on it. And you would play that. You would play their absolute willingness to believe, because if my benchmark is the S&P 500, I have no choice. Fundamentally, I would underweight this thing. Fundamentally, but psychologically, I cannot underweight this thing. I have to at least equal weight it, if not overweight it. And I'm trying to beat the benchmark. So if I'm trying to beat the benchmark, there's really only, 8 stocks that make up 30% of the weighting of the S&P. There's really only 8. I can't ignore the 8. I have to play the 8. Somehow I have to play the 8 and pray to God that they work out. If I underweight them, I'm probably going to get crushed, and I'm probably aware of that. Equal weight them, I don't know that there's enough with the other stocks for me to make alpha. I got to make it on these 8. So I have to get a little bit more active, and I have to do an ARK investment thing and tell you that it's worth $2,600 a share, and after a nice 40% run up in 11 days, when it gets to 245, 250, start selling those shares. You see, my $2,600 price target wasn't a serious price target. It was a psychological price target for that group of people who want to hear that that's what's going on, and will buy a whole bunch of calls, because that's what they do, which forces the market maker to buy the shares, and that's where I make my money. So yeah, it would be for me that I don't have a benchmark. There are easier fights to win. There are far easier fights to win than getting involved in something like that. But again, if I had no choice, that is probably what I would do. Is I would say, well, let's overweight the damn thing. And if I have any kind of platform at all, I would put price targets on Tesla, 900 a share, 1,000 a share, 1,200 a share. I would say that there is no competition. This company is way ahead of everyone else. They're going to own the market. It's a Tesla only future. In 5 years, everyone will own one of 2 different cars. Any color you want, but one of 2 different cars, and they'll all drive themselves, and some of them will fly. Now, I'd lean right into that story. Absolutely. Do you think Biden should step down? Well, it depends on what side I'm on. Let's bring it to Canada. Do I think Trudeau should step down? No, I do not. No, I do not. I'll tell you why. Because he can't win. And the longer he stays in, the more that party will be decimated in the next election. The last thing I want is a legitimate candidate for the Conservatives. Keep Trudeau in there as long as you can, because people don't like him in this country. He is going to lose the next election like you wouldn't believe. So no, I don't want him to step down, because I don't agree with him, because I don't like him, because I think he's a doofus and an idiot. I don't know if you heard about the next tax that they've been throwing around, but it's taxing your primary residence, so that there is no capital gain anymore. That if you buy a house and sell it, even if it's your primary residence, in the first year, you pay 50% capital gains tax on what you sell it for. On your capital gain, 50% is income. And that drops down to year 5, where it's 5% thereafter. If they continue to win, they won't stop with the taxes. He wants to tax Canada's way to prosperity. Can't be done. You can't tax your way to prosperity. Can't be done, but he's an idiot, right? To eliminate the threat, you must keep the threat in place. To eliminate him, you must keep him. So, do I agree with Biden's policy? Do I agree with the Democratic Party? If the answer is no, then I do not want Biden to drop out, because Biden cannot win. Biden will, he has slowed down. This is biology. It happens. It's biology, right? He has slowed down. This job, I think, the most powerful job in the world, requires a sharp mind, a very sharp mind. I don't think he's got it. And I don't think you want the government run by a group of handlers who decide everything for him. So if I don't agree with Democratic Party politics, I want him to stay right where he is, because he will lose. If he goes, then I want Kamala Harris in, because she will lose even worse. She will lose even worse, because Trump will play up the diversity higher on that one. Because what did see? Biden painted himself into a corner. The Democratic Party painted themselves into a corner, and I said it even before he got elected. He said, "I am going to appoint a female vice president." And my response was, "Why say it though? Why say it? You're crippling her right away. Why say it? Just appoint one. Why say you're going to do it? Just appoint one." Because now she's got an asterisk beside her name. She's not the best qualified candidate. She's the best qualified woman. Do you see the difference there? Maybe she is the best qualified candidate, but he took that away from her by saying, "I'm going to appoint a woman. She's the best qualified woman." Trump will play on that, and he will play on that, and he will play on that. And we've all just had enough of the DEI woke bullshit. We've all had enough. That stuff is gone. That bandwagon is long gone, down the road, broken taillights. Now, if I'm a supporter of the Democratic Party, yeah, you got to get him out of there. And Kamala Harris isn't your candidate. You got to get him out of there. If I want to win, if I believe in the Democratic platform and the work to be done, yes, he's got to go. So there's your answer. If you don't agree with the Democrats, keep him in place. If you agree with the Democrats, he's got to go. Yeah. What are your thoughts on Kamala Harris? I already said that. Thoughts on share-based compensation. Snowflake did $3 billion in revenues, paid $1.225 billion share-based compensation. How do you think about when making an investment decision, calculating cash flows? All of this is in every 10K. Every 10K has their share-based compensation in there, so you can read exactly how management is going to get their shares. None of this should come as a surprise. So when it does happen, it should not be a surprise. If it's happening outside of their share-based compensation, if it's just the board ad hoc rewarding restricted shares or new shares to attract people or to keep people, then you got a bit of a problem there. But for a management team and your inside shareholders to maximize their return, duh. I mean, duh. It is a rare person, I think, that does the right thing, even when it costs them money. It's a rare person. Most people are very how can I say it? I wouldn't say greedy. They're not greedy. They're highly self-interested. Just that they don't actually see it as a problem to be overly self-interested, and they may even convince themselves that it's in your best interest that I be highly self-interested. For a lot of these tech companies, I think it's important to look at their share-based compensation, because it typically is significant. Any thoughts on how long more data is needed for Fed to accept disinflation and rate cuts? I don't think that rate cuts are going to be that much a function of inflation and the economy. I think rate cuts are going to be more a function of the polls. If Trump wins, he's going to want lower rates. Powell will give it to him, or Powell will be gone. He knows that. So I think he watches the polls more than he watches inflation if he wants to keep his job. If he doesn't want to keep his job, well then, what does he care, right? So if you're looking for rate cuts, watch the polls. The more Trump is in the lead, as you get closer to November 6th, the more it's going to be rate cuts, absolute rate cuts, yeah. But if we assume that they are truly looking at data, the data from last week was fairly consistent that you have a demonstrably slowing economy. And I think as you have an economy that produces more and spends less, prices only go down in situations like that, or at least have a very hard time going up. Where to find your video on how to structure responses to different L3 questions? I can't find it on YouTube. No, all the CFA stuff on YouTube is gone. Will you do a level 3 Q&A before the exam? Will I do a level 3 Q&A? 40 of them? When you're on the site, click on office hours, and you'll see office hours and drop-in sessions. Office hours start July 11th. They start, where are we, 7th? They start this week, this Thursday is the first, are the first office hours. So yeah, I've got, I think 1, 2, 3, 4, 5, 6, 8 sessions there, and we've got 14 sessions centered around the mock exams, 22 sessions that are anywhere from 2 to 3 hours. So 44 to 66 hours of live Q&A. There's no shortage of support for the L3 exam here. Does your portfolio go around just a few names that you trade several times a year, or you're permanently looking for new ideas? My own that I manage myself, no, always looking for new ideas, always looking for new ideas. Think of it like a game of billiards. I mean, you played 8-ball, right? Well, in clubs or bars or some point, you must have gone through the pool playing phase. Everybody does, I think. A beginner plays the shot in front of them and then hopes to sink that ball and then looks around the table for the next shot. As you get more experienced, you play your second shot before you take your first shot. You look at the table and you think, okay, well, where's my next shot? I'm not just going to take this one, because how I hit the white ball and where I hit the white ball will tell me where it lands so that I have my next shot. You always play your next shot. Same thing here is you take your position, you have your position, you say, okay, well, I got this. Now what? I'm not just going to sit here like this and watch the screen and watch pennies go up and down all day long. You got to make use of your time. So that's when you start thinking about other sectors that you want to be in, other company, well, maybe not other companies right away, but sub industries or industries that you want to be in. What companies are in that industry? You grab a 10K, you start reading. Sometimes after 5-6 pages, you think, I'm not interested in this industry at all. I don't like what I'm reading. It's too dependent on this or that. But it's always searching for something. You're always searching for something, and there really aren't that many opportunities out there, right? There is a lot of opportunity that is very tied to beta, which means you can buy something and the market will either go up for you or go down for you. And that's it. But opportunities in the sense that, like CapREIT, I think is a fantastic opportunity. I think will outperform the S&P this year on its own. Those aren't just everywhere. Those take time to find. Sometimes years of knowing a sector, and then the timing just lines up and the valuations line up in such a way that you say, why is this like this? So it's you're constantly looking, not that you're feverishly looking, but you're always looking for something. Companies with ROE greater than 20 and ROCE greater than 15 considered to be good for investment. Can you explain in detail? No, it doesn't. I mean, you can't break things down to simple rules like that. Like a company with an ROE greater than 20%. What does it do? Is it an asset-heavy business? Is it an asset-light business? Are all its peers doing return on equity of 30 and 40%, and this one's doing 20%? How long has it been doing it for 20%? Does it have a moat? Does it have some product or some technology that nobody else can copy? Does it have something that can ensure that that ROE over 20% stays in place? Because if it's in a competitive industry and there's one company with an ROE over 20% because it has a product that other people can copy, then that's not going to hang out for very long. So simple rules like this, may put it on a list where you go, well, let's look into this a little bit more. But it certainly doesn't. I don't know that I would have a trading rule saying, let me buy everything with an ROE greater than 20%. What is your definition of a good catalyst that would have the potential to move a stock price? So I imagine you must be talking about a particular company. Name it. I mean, like, tell me what's going on with the company, and I'll tell you what a good catalyst is. And an undervalued company, maybe several quarters of earnings that come in way better than expectation. If it's an extremely overvalued company, maybe a couple of quarters of earnings that come in well below expectations. If it's a biotech company, approval for a key drug, anything that provides either new information or that eliminates some uncertainty that existed. So let's say a company is being sued for $20 billion, and that would kill the company. And that's going on. And then you hear on a Tuesday afternoon, the judge dismissed the whole thing. And the market had like a 50-50 on the judge removing. Well, that would move the stock price, right? But if everyone thought that the judge is going to dismiss this lawsuit, not a problem, then the market would have probably not priced anything in, which means there is no new information and it doesn't remove any uncertainty because there was no uncertainty about it. So catalysts, I would say, are things that reduce uncertainty or that provide new information that we didn't have before. Located in Asia, enjoy Monday mornings because they start with market outlook. Okay. Oops. Lost the, there it is. Don't mind sharing what percentage of your current total net worth comes from financial market returns, entrepreneurship, CFA courses for a part-time job. Never really thought about it. %60 was probably the sale of my business. About 60% of it. Yeah. So I would say if you break it down, jobs, no. You might say, okay, well, maybe there's a million in retirement savings over my life that have come from, employment. Maybe that much. You will make a living with a job. You don't make wealth, you make a living, right? That's it. Entrepreneurship by far. Financial market returns have been good. I can't discount that, but by far it's been entrepreneurship. Define low value stocks. Which criteria do you use? PE, PEG? PE is not always the best thing to look at because a company might have a low PE for a particular reason. A low PE combined with a very large cash flow yield I think the cash flow yield per share, take cash flow from operations, and take out CapEx. So your free cash flow, divide that by the share count, free cash flow per share, I think is a really good one to look at. Some companies have cash flow yields of 15%, as high as 15%, meaning all that free cash flow, if you bought the entire company within 6 years, you'd have all your money back. 6 years, 6.5 years. That's pretty good. That's what makes GM such an interesting company, because without the share buybacks, if you took their free cash flow, you'd own the company in 4 years. In 4 years, they couldn't buy back all their shares in 4 years because they just keep driving the share price up. Call it 5 years, 6 years, they could buy back 100% of their shares, just with the free cash flow. So the EPS and the PE, I wouldn't hold too close to. You're going to have some companies with a high PE, but with very strong cash flows and sustainable, and some companies with low PEs with very strong cash flows as well. So I don't know that on its own is enough. Explain the mechanics of your synthetic long position. So I sold the put, a $70 put. And then I bought the $70 call for the same expiration for March 2025. That's what a synthetic position is. Synthetic means that you're long the stock, but you're not long the stock. You created it synthetically. So that is what I have. The delta is the important thing. It gives me a delta, I think, of 1.03, which is equivalent to having 103 shares for each 100 share contract. The deltas should add up to 1, but sometimes it's 101, 102, 103, but call it close to 1. Being that you have a delta of basically 1, if XLU goes up $1, I go up $1. So I have the same payoff structure as owning the stock. How do you go long in the Fed funds futures for January? You just buy it. I see one contract is about 400,000. The underlying is 400,000. The underlying is a deposit of 400,000. Right, that's all it is because you have to have an interest rate multiplied by some notional amount. So 400,000, it's like 396,000. It's what the interest rate would be multiplied by. It's the notional amount of the deposit that you're making, or said another way, it's the value of the bond that you're holding, the value of the money market fund that you're holding, and you just buy it. I think the margin for ZQ is under $2,000. It's light. What are your thoughts on generating wealth in the markets versus generating wealth through owning a business? Do you think the former is probable for someone that is capital constrained? If you're capital constrained, then no. Owning a business will always do better for you because your labor is free, right? You can work all day long. It's not going to cost you anything. And you are in control, for the most part, of the decisions you make. But it depends on what business that you're in. I mean, if it's a small business where you're earning, a livable income, then that's still not going to provide you with wealth. There has to be some growth. To get real wealth out of the market, if you're capital constrained, you have to get assets under management, which means you have to convince some people, accredited investors mostly, some people to give you money that you invest and you get some percentage of the gain. Yeah. But if you're capital constrained, it's a long road. And the motivation is to make it a shorter road by taking bigger bets, by taking riskier bets, and that usually leads to blowing up over time. So I would say that being in business is the best way, but if you are in business that's producing cash, the cash will pile up. You're going to have to do something with the cash. The markets are kind of the best place for it. I think prioritizing high cash flow business could provide more opportunities in the market. Yeah. Do you think it's foolish to prioritize generating wealth in markets when you're small? Prioritize. Well, yeah, it's not going to be your priority. It shouldn't be your priority if you've got 50,000 in the market. That shouldn't. I mean, that's nice to have. That's a nice, make sure that you keep that 50 and grow that 50 each year. But you're going to have some kind of contribution plan, which means your contributions are going to have to come from some other revenue stream, some other income stream. No, I don't know that 50,000 would be enough. But what 50,000 can do in combination with the job that you have is demonstrate that you can consistently provide returns through some form of strategy that other people cannot get on their own because it's your stock picking ability. Then over time, you can start to grow or think about a fund, which in the beginning is friends and family, right? Which is risky, taking their money because you lose a penny of it, man. Yeah. Why did you cut off the flow? I like the mop you had going. Yeah, I didn't. I didn't. It had to get cut, and I couldn't get the color I wanted when I was there. They didn't give me my color. I prefer it to be brown again, not so silver, because I don't feel inside what my hair looks like. But in my defense, I started going silver at 26. One thing I'm happy about is I have all my hair. I don't have any male pattern baldness. I have all my hair, so I like that idea. But I would just rather it be, a little darker. But I don't like it long. What is your thought regarding the potential impact of AI on the future of CFA designation? I think it's minimal. I think it's overblown. I think that what we've seen is a real nice increase in what that field can offer. We'll just put it under the moniker artificial intelligence. Of what it has to offer, but it's not really intelligence, is it? Right? It is a fully predictable output of an algorithm that if you had the data set and the capacity, the mental capacity to think about that much data, the outcome is deterministic. Determined by the algorithm that is in place. You can trace it all the way through a neural net, and at each stage you can figure out which probability would rule. You can figure it out yourself. There are non-linearities that can happen in one of these, depending on how it's programmed, depending on how it learns. But that if you had traced it through, I think you could have come to those conclusions yourself. What AI is just a faster processing system than what our brain has. But I don't know that it's a better processing system, just faster. For example, if you're driving a vehicle through a rainy night on a busy street, the decisions you make automatically over a 1 minute period, the amount of computing power necessary to do the same thing is astronomical. The amount of computing power you would need, and it still would not be as intuitive as the human would be. So I think we put too much emphasis on the word intelligence and not enough on the word artificial. And I think that it is the wrong name. It should be called really super duper processing, better than any human could do, faster than any human could do. Super duper processing, which can consider thousands of potential cases, but not better. It's not intelligence. So no, I don't think it's going to replace CFAs. I think it's going to remove some of the more tedious functions that you would perform. Much like uh, computers got rid of the typing pool, and software pretty much got rid of bookkeepers. We don't really have bookkeepers per se anymore, not to the extent that there used to be. Technology does reduce repetitive, routine cognitive work. I think the dream here is that this is going to eliminate non-routine cognitive work. I don't think so. I don't think so. I think it can do some pretty incredible things. But in the end, some fairly deterministic things. That it is nothing more than code running. There is no mind. There is no conscience. There is no intelligence. It's, if you say, wow, that's really great, it's like, that's good code. You don't say that's an intelligent system. You say that's good code. It's not intelligence. And I doubt that it can ever be as effective in non-routine, let's say, more creative endeavors, more intuitive endeavors than a human. Are you looking at some point to move the live streams to your website? I used to love tuning in, but some people just spam 4+5 comments to make up one question. I don't know that that would change anything. If you have some ideas for what it would look like on a website, then let me know. How does your applied option series compare to Natenberg Sinclair books? I think the Natenberg book is probably the pinnacle. Is probably the best one out there. You'll find that if you get to a certain level or a certain experience with options, everyone's got the same information, right? Everybody understands the same thing. Everyone's looking at the same model. Natenberg's book is good in giving you a good understanding, a good intuitive understanding of the model and why it works. It's very light on examples. It doesn't give you a lot of examples saying, well, let's look at this one. How would we put a trade on this, or how would we use it in this case or in that case? So I would say that that's what the applied options does, is it is applied. I do use some examples. Now the examples are dated because I did it like 2 years ago. So the examples were from 2 years ago. So you could see, nice thing is you could see whether or not any of them worked out by just looking at the history of the price. But it's not the target that matters. It's the process that matters. So in that case, it's always timeless, because it's like, well, let's try this strategy on this particular stock. Let's look at the setup. Let's think about this, and then let's think about what trade makes sense. Natenberg's book, I don't even know about the other two, if they show you how to do an allocation factory or an income factory. They talk about theta, but I don't know if they show you how to combine the thought of doing that with doing something else like generating income, or running a theta portfolio, or allocating, building an allocation over time. Did you see the Phoenix PD video of an officer pulling over a car to find no passengers? It was self-driving Waymo. That's a level 4. Yeah, Waymo's in 2 cities. I think they now have permission to take any driver from any passenger. They were restricted before. Now it's any passenger. So they're already doing like 50,000 rides a week, right? That's Google's car. There were a couple of those types of videos with Cruise in San Francisco where a cop would pull over a Cruise and there was nobody in it, and he was confused. You could see, what do I do? There's nobody driving this car, and then the car just pulled away while it was pulled over because, well, how often do those situations happen? Where's the code for, hey, there's a cop standing outside my car, here's what I do? How often does that happen? So the code just doesn't know what to do at that point. It can only read the environment and say, well, I see no issue here. Let's move on. So it drove away from the cop. Regulation to come. There is already regulation. You can't throw one of these cars on the road without having it approved. So if you are behind the wheel of your own car and it's in a self-driving mode, fine, off you go. You're responsible for an accident. If there's an accident, it's your insurance that gets hit. What you cannot do is sit in the back seat while it's driving itself. That's illegal. You cannot do that. You also cannot pick up fares. You cannot become a taxi service with no driver. You must be behind the wheel. Now, you can have a vehicle that has self-driving capability with Uber, and in some parts of the ride, you can let the car drive itself, but you must be behind the wheel. There must be a driver in the car. Only a level 4 vehicle can remove the driver. Only a level 4 can remove the driver. There you need approval, and there's regulation. And the regulation sometimes is not just state by state, but city by city. It's just a web of regulation. So the idea that you will have a consumer-owned vehicle that will then leave your driveway and head off to pick up a fare somewhere, at this point in time, almost everybody in this industry, including the regulators, would tell you that is pure fantasy. That is pure fantasy. Maybe someday, but at this point in time, it is pure fantasy. But there are 40, 50 robo-taxi companies in the world. China has half a dozen. The US has 7 or 8. Canada has one out of Toronto, just received, I think, a $200 million investment from I forget who. These are all over the place. These are they're everywhere. So when Tesla's unveiling its robo-taxi in August 8th, they are late to the game, significantly late to the game. It is going to be, if you believe that no, robo-taxis are the thing, well, then it's going to be a crowded marketplace. A crowded marketplace. Are there that many people that need a ride? Are there that many people that really need a ride with no driver? Now, if somebody's going to be successful at this, if somebody is motivated to do this, it's Uber. They now have to pay their drivers in Connecticut. Uber and Lyft both have to pay $32.50 an hour to their drivers, which means the consumer is just going to pay more for a ride. And if more and more cities force Uber and Lyft to pay their drivers, Uber already has a platform. Uber has a fantastic platform. Uber already has a platform. They will be the winners. Hands down, they'll be the winners. This is going to be such a crowded space that unless you already have cars on the road now, I don't see how you're going to compete. So how does Google win? Google sells Uber a whole fleet of these cars. You want cars? Here's 1,000, and here is the license per year for each vehicle, the software license each year. That's how Cruise wins, Waymo wins. That's how everybody's going to win. Everyone's going to do that, because these level 4 vehicles aren't cheap. They're not cheap to make, and you need a big company that can self-insure, because the insurance industry isn't there. The event on August 8th is purely for the stock price. It's purely for what I said before. It's tell the faithful exactly what they want to hear. Tell them they're all going to heaven if they donate this much money to the church, and off they go. They'll buy their way into heaven, right? You said you can achieve 20% return with option without much risk. True. But if you have to use several strategies, not only one. True. One is selling puts on low value stocks. Which could be the others? Synthetics. Synthetics is a good way. So my XLU is a synthetic that requires 1/3 the amount of capital, right? Now, you got leverage both ways, right? As soon as you do a synthetic, you have a linear payoff, which means you have leverage to the downside. Only a call gives you leverage to the upside while capping your downside. I just don't like paying for stuff if I can get it for free. That doesn't mean I don't do calls. I've done calls. I've done risk reversals. Selling puts is, to me, an easy thing to do, because if you are capital constrained, the argument is, okay, well, you were selling puts on AT&T. Well, it's almost $19. Could you not have done better by just buying AT&T and holding it for up to $19? Had I bought shares of AT&T and held it to 19, I would have required much more capital, because I was selling puts in quantities of 50 and 100 at a time. So I would have had to buy 5,000 to 10,000 shares at a time, and held them. With the puts, I did it multiple times. So if you think about how much I made, I probably made about the same had I just bought, let's say, 20,000 shares and held them all the way through. But I did it with 1/3 the capital. 1/3 the capital, which means I have money working somewhere else. So if you think about the amount of money that you have, and one stock just takes off, oh, you could have owned it and made more. Yeah, but I still have this capital. It's the capital that shows the return. I don't really care what the underlying is that I'm using. It's the capital that you're using that you turn over every month. That's why I say you need a list of 20 or 30 good stocks that you're willing to sell puts on, knowing that every month, not every stock is going to be worth selling puts on. I don't want to chase it on the way up. I have a house, and if the stock leaves the house, well, then great. The stock has left the house. Every now and then the stock moves back into the house. I was selling puts on Oxy at 60, 57.50, 55. It ran all the way up to 70 for a while. Well, okay, well, let it go. Let it go. I'm fine with that. And then it came back down. It moved back into the house. So I started selling puts on it again. Now it moved out of the house again. It's 62 and change, something. Freeport moved out of the house, and then, it sold off for a while. I thought, well, okay, I think the high 40s is where it's going to live for a while, 45 to 50. Let's sell the 47 puts, and now it's 52. So I closed that one, because why keep it open for, I think it was like 9 cents left on the put. Some other company will move into the house, and some other one will move out. But my investment is in the house. I'm not going to go chasing prices up and tie up that much capital. So in essence, I probably did better by selling the puts, because the other 2/3 that I would have used to buy the stock would not have earned the cash return that I earn every day. I am a level 3 CFA. I did the practice questions on the ecosystem. I got 75% correct. You know what I just noticed? Let me just pause here. What I just noticed, and I got to apologize for this. My microphone is over there, connected to the new computer. and I'm still on this one. And I just noticed that you're getting my voice through the computer microphone, and that's not the best microphone to use. So this probably sounds like crap right now. So we'll shorten this one. I won't do a long session because a video with terrible sound is not very satisfying to listen to. I should have moved my microphone over. That's on me. Where did we leave off? Practice questions on the ecosystem got 75% correct. However, the percentile showing that I am at 19 percentile. Should I worry? First of all, I don't even know whether or not I would accept any numbers coming off that system. I haven't seen it. I haven't seen it. I also don't know what algorithm they use to put you in the 19 percentile. For example, on our site, when we did it, we had cutoffs. Is you throw away the top 10% of marks and you throw away the bottom 10% of marks, because you have to think about how people use the system. They'll call up a quiz and then they'll just go a score, because they want to see the question and the answer, They don't want to do all the questions and then see the answers, so they just answer anything and they end up getting like 20% or 25%. So we know that's not real. And then there are those who take quiz again. Well, once they know all the answers, they get 100%. Well, we know that's not real, right? So we eliminate those. You have to think about how the user uses something, and then you have to design. If you want it to provide good information, you have to anticipate what is bad information. I don't know if CFAI anticipates what is bad information. Do people go through a quiz and say, okay, I got the answers, and they go through it again and again, so they see all the questions, so they go, oh, it's this. So pretty soon they're all doing 100%, and the system's not is not eliminating the top 10% or the top 20% of scores. And since everyone's doing 100%, your 75 seems like the 19th percentile. Without knowing how they are arriving at your percentile, I can't give an opinion on that. What do you use your truck for? Drive. And girls, they like 10-year-old pickup trucks, man. Mostly for the girls. It's a 2013. It's only got 77,000 kilometers on it, because I really don't drive that much. And if I blindfolded you and gave you a ride, you wouldn't know you were in a 10-year-old vehicle. You wouldn't know at all. I was thinking of trading it in on a Yukon. I think the trade-in was like 17,000, but it reduces the sticker price. You also save the 13% sales tax, so it's really almost 19,000 when you think about it. But I am not paying $3,400 a year for insurance. Not when I pay $900 a year for a clean record. Am I going to start paying $3,400 just because the insurance company says, oh, you can afford one of those? Well, then you can afford this. No. When from now on, if you're going to bill me based on my success, I'll go without it. Thank you, but I'll go without it. Then no one will have anything, right? Now you guys can't make any money. Can foreign investors invest in CAR.UN? I'm told they can, so I'm going to go ahead and say yes. When going along by selling cash secured puts, is it better to sell at the money puts or deep in the money puts to maximize the premium? Depends on what outcome you want. Do you want the stock put to you? Do you absolutely want it put to you? Then sell slightly in the money. Or if you say, no, I want a good balance of income and I don't mind if it gets put to me, then sell at the money puts. But if you say, no, I'm doing it for income, I'd rather minimize the probability of it being put to me, then you'd use 30 delta, maybe 20 delta. And if you're saying, no, pure income, then 10 to 15 delta, right? So I don't understand the difference between a depository and a transfer agent. the transfer agent, I believe, handles your dividend, right? So, and handles your drip, so that if you sign up for the drip, rather than getting a dividend, you just get more shares. The company doesn't do that for you. The company simply, when there's a dividend due, the company doesn't issue all the dividend checks or whatever you want to call it. The company sends the full amount of the dividend to the transfer agent. The transfer agent then determines who gets what. And if there are shares to be delivered, takes the dividend and goes and buys shares for you. The depository, this is you're buying a share that represents a share of a company that is not listed on that exchange. So, and I'm not really sure, because there are two types of depositories, right? There's global and there's American. I'm fuzzy on how those things work. Level one, in level one CFA, there's a description of ADRs and GDRs. I don't know that it's a very detailed description, but there is one that is there. But this is something that you can get an answer for on Google nice and quickly. Applied series question. You said falling rates should be one signal to get out of consumer discretionary. But won't falling rates make consumer discretionary more valuable as consumers spend more? So, whenever you hear any kind of relationship related to interest rates, it is usually the result of what is called demand-driven inflation. So if you have demand-driven inflation, what happens is, as the economy increases, as you go into expansion, prices start to increase, the Fed continues to increase rates to try to keep inflation down. Usually something breaks and the economy drops off and the Fed drops rates really fast, which means you have unemployment increasing as interest rates are dropping. You don't want to be in consumer discretionary at that point. Whenever you start to see unemployment creeping up, consumer discretionary will typically hurt, because it is discretionary. Those people who are losing their jobs, you don't have that spending. But when they get their unemployment, they will still spend on autarkic spending, which is like consumer staples. They'll still buy toothpaste, toilet paper, food, things like that. But the discretionary stuff goes away. So this was supply-driven inflation, meaning that as supply started coming up and improving, the underlying economy was saying, "Oh, finally, okay, we're still here," so that we haven't really gotten too much to killing demand, because you've fixed inflation by improving supply. But again, as unemployment increases, and if the Fed is lowering rates, it's going to be because inflation is coming down while the economy is solid, or because the economy is starting to drop. The argument is, if inflation comes down but the economy is strong, what do you need? What do you need to cut rates for? Because you have the two mandates satisfied. So usually you get falling rates when you get rising employment. That's why you would get out of consumer discretionary. When you do your video creating Meldrum's valuation model in Excel, will you use a company as an example and show how to go through inputting items in the 10K and 10Q? Well, you have to. You're going to need some history of income statement numbers. Everything will flow from the income statement. You start with your revenue assumption. Everything starts from the revenue assumption. And then you have relationships. What is the margin going to be? What is the operating margin going to be? What is the level of working capital going to be as revenues rise? So you know how to change your working capital accounts. What's your capex? Your capex will determine what gets added to fixed income. That will determine what your depreciation line on the income statement is. So you start with your revenue assumption, you start with your relationships, and all those relationships are assumptions. I've yet to see any financials that have a constant assumption from year to year, from quarter to quarter. Even if you say, well, over a 3-year period, it should be this. But then if you go to a 4-year period, it's different. You go to a 5, it's different. So it's like, it's just a guess. The thing that we're going to see when you do these models is, my God, you're guessing a lot, aren't you? Yeah. You're just saying, I think it's going to be this. Well, change the number. So when you're done, you can do sensitivity analysis. If you have all your assumptions on one sheet, you just change one number and you could see how that changes things. You could see where the company is more sensitive. And it's super sensitive to estimates of growth and estimates of the discount rate. Change your cost of capital by a little bit, change your growth rate by a little bit. All sorts of things happen, right? These price targets are built on a mountain of assumptions. What is useful about these is that it uncovers all the assumptions that you're making so that you can understand what assumptions you made to get to the price that you need to get to, or that you think that it's going to get to. But as far as inputting items in the 10K and 10Q, I think you need at least 5 years of quarterly data. I'm not going to do that. I'm certainly not going to do that. This is where a CFA would say, well, let's see how good AI is. Can AI give me everything that I need? If I ask AI to give me this, will it give it to me? The problem with the models that you get for free is they have a cutoff date, I think, of 2021 or 2022 on the data. So they're not quite there yet. But that's the power of Bloomberg. Bloomberg already has, if you look for a company, it already has that data for you, already cleaned up. Somebody already looked at it and it's already cleaned up. You can't trust, Yahoo Finance or these places. You can't trust that stuff. But I'm probably just going to have somebody do it for me. I'm going to say, look, you have to go back over the last 20 10Qs. Here's the most recent 10Q. I want an income statement, balance sheet, cash flow statement. I need all of the headlines that this company uses, all of the line items. And then I need 20 quarters. Somebody's going to do that for me. I'm not going to do that. But whatever company I use, I'll have that done. I'll provide the spreadsheet for you with the last 20 quarters of data already in there. Before entering a trade, do you look at the sector ETF first to see the sector's performance? Yeah, I do. For some that have very good ETFs, I will look at the ETF. Yeah. Other things don't have very good ETFs. So, for example, Canadian apartment REITs, not really. Right? Sometimes there is no ETF for what you're looking for, but yeah, I use ETFs. There's a couple of really good ETFs that I'm looking at in the AV and robotic space. BOTZ is interesting, although they don't have very good options. But if you're looking for a diversified tray on robotics and AVs, self-driving and that kind of thing, BOTZ is good. There was another one that I was looking at. I forget what it is. I have to look it up. Camera covered. There we go. Watch list. Oh, I'm on the wrong system. Yeah, it's not on this one. It's on the other system. How are we doing tonight anyways? Where's the US market is down? ZB is down. Bitcoin is down quite a bit. Well, Canadian flat. Peso still gaining strength. Oh, that's nice to see. Where do we leave off here? Are you following Canada in the Copa America? No. I joined late. Are we getting an intro to money laundering? Well, no. No. Do you leave your shoes in the front door? Yeah, I have a pair of shoes at the front door. The slippers aren't mine, but I have a pair of shoes at the front door, and I have a pair of shoes at the back door, a pair of shoes on my feet? Depends. I leave a pair of shoes in the cardio room all the time because, well, that's where you've got to wear certain types of shoes, right? You said in the market outlook that your 3 moves with the most conviction were Canadian REITs and utilities. What would be number 3? Copper. If I only could do 3 things for the next 5 years and go into a coma, it would be U.S. utilities, Canadian apartment REITs, and copper. It would be those 3 things, hands down, those 3 things. Since you're on the topic of philosophy, I have to ask, you mentioned once you don't believe in God. No. Do you believe in free will, or are humans merely biological algorithms reacting to external stimuli? We have free will. I know there's some evidence out of neurology looking at how your brain function, and that your brain it shows activity in your brain before you take action. Well, the brain is super, super fast. By the time you decide to move your arm, say, okay, I'm going to move my arm. I have free will. I'm going to move my arm. You have decided that you're going to lift your arm up. Your brain will already have activated before your arm even moves if you're measuring it. Does that mean that your brain is the one that has done the deciding, or that the decision happens in the brain first before you can actually move your arm, no matter how fast you think it's happening? Well, I believe in free will, because at any point in time, I can choose to do differently. I can hit end stream right now, or I can let it run. To say that I don't have free will over that, you'd have to have more than just an academic argument for it that fits in some publication somewhere. But yeah, I fully believe in free will. Are we merely biological algorithms reacting to external? We are that as well. I don't have free will on whether I'm cold or not. If I'm outside in 10 below temperature in a t-shirt and shorts, I'm going to be cold. I don't have free will over that. So yeah, there's quite a bit, I think, that goes on inside your body and your reaction to external events that you really don't have control over. These things are simply going to happen to you, right? If I get shot with a bullet, a bullet enters my forehead, it's going to kill me, no matter how much I think, no, I have free will here. So this is the big problem with a lot of academic research, is you get a body of research around one topic, and then you get a body of research around another topic. And it's like this debate between these 2 things. The biggest, longest running debate in sociology is structure versus agency. That's been going on, blah, 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 blah. You get sick and tired of that one. So somebody comes along and says, well, isn't it a little bit of both? Yes, it is a little bit of both, but that's not publishable because you don't have a coherent, consistent school of thought. Only later on, when you're a full professor, can then you do a meta-analysis and says, well, I think it's a little bit of both. I think it's the nexus of these 2 things together, and blah, 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 blah. And suddenly, oh my God, he's so brilliant. He brought the field together. It's like, Jesus Christ. Right? So it's, do we have free will? Yes. Do we react to external stimuli? Yes. Call it a spectrum. There are things that I've got full choice over what I want to do, right? When I go to the grocery store, I can put the chocolate bars and the ice cream and the potato chips into my cart, or I can put the vegetables and fruit into my cart. I do have that choice. I can make that choice. But I can't decide in a rainstorm not to get wet, which means I'm going to shiver, which means my body's going to react in a certain way. It's going to bring heat into my body to protect my internal organs, and I'm going to shiver, right? I don't have free will over that. I bet Tesla have the biggest proportion of shareholders who don't know how to read. I don't know. I wouldn't say that they don't know how to read. I would say that they are generally uninterested in reading, and I think they think, what would be the point of me reading? Because the future is not in these statements. The future is going to be this, and it's going to be that, and it's going to be this. When I put out the video a couple of years ago, Ice Age is far from over. I got beat up by the Teslites in that because of my prediction at the end of what would happen to their margins, and I was absolutely right. In fact, I was more aggressive in giving them more leeway. Their margins fell a lot faster than I thought it would. But some of the comments were, I don't see how this can be, 50% growth for the next 6 years at 10,000 margin per car is this many trillion. Where am I wrong? I remember one person saying that, where am I wrong? It's like, because you're assuming that the future is a Tesla only future. I don't know that I wouldn't say that they don't know how to read. I would say that they are generally uninterested in changing their mind. They're generally uninterested in those sorts of things. Now, I don't get that anymore. I don't get anyone saying 50% growth for the next 6 years. I don't get anyone saying that. I get. But you're forgetting about the full self-driving. You're forgetting about robo-taxi. You're forgetting. I'm not forgetting about it. I'm not forgetting about it. It's just if we think robo-taxi, it's like, well, okay, you'll be the 42nd company that is going to do it. Oh yeah, but they're way ahead of everyone else. Are they? I don't have evidence that they're way ahead of everyone else. I think they're just unwilling to. I think they're dating. I think they're dating a hot girl, right? You're willing to overlook a lot when you're dating a hot girl. You're willing to overlook a lot. She's a bit psycho. Yeah, but. So I think they see Tesla as a hot girl, and they're willing to just overlook a lot. That's probably a good analogy, right? I think being an investor in Tesla is like dating a stripper. Fun while it's going on, but you just know it's going to end badly, right? I think the question of free will is an interesting one. Well, you have free will. Once you subscribe to a conclusion that you don't have free will, what do you do? Like, think about it. What do you do? Right? Then I would say you have no free will because you subscribe to the philosophy that you don't. Which means whether you're faithful to your wife or you cheat on your wife, it's not your fault. You have no free will. So that you then give yourself permission for anything because, well, couldn't help it. I have no free will. I recently looked into CVS current price levels. No. I don't know that any of those are doing very well, right? CVS really is. I mean, these were meant to be at heart pharmacies that bring you in to sell you. That they don't make a lot on the pharmaceuticals. They get a dispensing fee, but they don't make a lot on that. They're trying to sell you higher margin items when you go in there. But more and more you have, especially for recurring prescriptions. Let's say that I have high blood pressure medication and I need it filled over a period of time. Mail order pretty much owns that at this point. You have pharmacies in Costco. Most people, when they head to Costco, drop off their prescription, they do their shopping, they pick it up at the end. You're having pharmacies appear in a lot of different places that you don't need the traditional pharmacy anymore. And when you go into these pharmacies, it is higher price stuff than you can get at Costco or that you can get at Walmart. So you think, well, I can get this stuff cheaper at Walmart, and Walmart has a pharmacy and Costco has a pharmacy. So I think I don't know so much that I would look to them to recover. I think they're bookstores, right? That being that the market structure has changed, there probably is no reason for their existence any longer. When you are short or long a stock, what target do you set yourself before closing the trade? I don't know. I don't know. I don't know so much that I would say that I have a target. You have a target based on what you know today, but that's a moving target, right? So, for example, um, GM. I think selling puts on GM makes a lot of sense, but I'm at the margin less inclined to think it makes sense. I still think they're going to buy back shares, but I think GM will probably see low 40s before it sees low 50s. I think it's going to have a tough second half. You have unemployment increasing in both Canada and the US. At the margin, that's going to take away sales. You're going to have more people like me saying, well, what's this insurance business going on? And the price of gas. I mean, I was going to go from a 6-cylinder truck to an 8-cylinder truck. Well, that's just going to take more gas. So these are all complement products. And economics says when the price of a complement product goes down, the demand for the original product begins to drop. So I think they're going to have a tough second half. So a quarter ago, I would have thought, no, I can see them breaking 50 this year based on the information at that time. Based on the information now, I don't know. I'm less convinced that they could. So I don't know that I have a target. So let's take cap rate for example. Uh, I bought way more shares than I should have, only because it was at such a low price. I couldn't understand what the hell was going on. Why would nobody touch this? And I would almost get upset. Like, okay, fine, I'll just buy more. I'll just buy more. Thank you. I'll own the whole company if it stays here, but I'll just keep buying more. So I'm willing to unload 10,000 shares at some point, which is why I was trying to sell a 47 call. Didn't get the price I wanted. If it goes up more, I'll try to sell a 48 call. And if it gets to 47 or 48, well, then I'll sell 10,000 shares. But I bought way too many shares to begin with. But for the most part, at this point, I would say that uh, I think it should be trading at or a slight premium to its net asset value, which is 55, $56 a share. And it's 45 and change right now. And I don't mind holding it because I get paid to hold it. I get a dividend, a nice tax efficient dividend. What's your investment thesis for EWW? The puts on that are working out quite well. Let's see where EWW is. If there's no negative sign in front of it, most of the time I don't pay attention to it. And right now, I think there's only um, three underlyings that are giving me grief. Kraft Heinz, but I only did a small number of those because I've never traded those before, and it was somebody else's idea that I said, nah, that doesn't look too bad. Goodyear Tire and ES, the short on ES. Where is EWW? There it is. EWW. I'd sold puts at a buck. I had the 55 puts, the July 19th 55 puts sold at a buck. They're trading 25 to 35 cents, 30 cents. I don't appear to be in any danger of them being put to me. Where are they now? 57, 27.28. I got 55s. They expire next Friday. I think I'm pretty good on that, given their level of fixed investment year over year that we got last week. Their data seems to be coming in fairly decently. For EWW, the investment thesis is that you have a decent enough population, a young enough population, and a labor cost lower than China. That if you can locate some things in Mexico and avoid China or avoid new capital investment in India and just do it in Mexico, why wouldn't you? So I think they're going to do quite well. Do you think the Fed has achieved a soft landing? The road to a hard landing goes through a soft landing neighborhood. So in looking around right now, you say it looks like a soft landing, but you go through a soft landing on your way to a hard landing. So we won't know if they've achieved a soft landing for another year and a half, 2 years. Contrasting the rising stock market and low unemployment rates, interest rates are still high, inflation still above the target. Yeah. Other than, yeah, those are just facts. I don't know what the question there is. What opinion do you have to young Canadians who have 200K and have no idea where to invest their money? Would CFA level 1 give them basic knowledge for portfolio management? No. Level 1 is a lot of declarative knowledge. It's know what, what's a stock, what's a bond, what's a derivative. Here's some basic knowledge around bonds, stocks, derivatives, but in no way will it give you the ability to pick something. Level 2 will teach you how to value things, but it will still never tell you what you should value. Yeah. So nowhere in the 3 levels of CFA will it help you in determining what to pick. It will give you the tools to assess a target once you decide what to pick. But it won't say buy this, buy that, do this, go here, go there. There's just too much that requires experience that can't be codified, that you have to live it. You have no idea where to invest your money. You're young. You're 200,000. I would say 120,000 in an ETF that tracks a broad market index. 80,000 in an ETF that tracks a bond index that gives you a decent enough duration. If you have no idea what to do, don't try to come up with ideas if you have no idea. Just get passive exposure on a 60/40. What's your take on the huge investment by Volkswagen in Rivian? Did I read somewhere that there was an issue with that? Volkswagen wasn't going to do something, or I don't know. I don't know enough about that, or what their plans are. Ford doesn't seem to be that interested in it, so maybe they missed an opportunity. I'd like to hear your thoughts on Apple stock. I think they continue to perform. I don't know that Apple is easily going away anytime soon. The computer that I bought the Mac Studio 6500. Then you got to buy a monitor, $2,000. I get it in, I unpack it, I hook it up. I'm so excited, and I look in the box. I go, "Where's my keyboard and mouse?" Oh, well, you buy a computer now, you don't get a keyboard and mouse. You got to go buy a keyboard and mouse. When you start unbundling everything, your margins just go up, right? So I had to go buy a mouse and a keyboard. $300 later, I thought, well, $9,500 for computers lot. Now I'm at $9,800 for a computer. So I know they're making a lot of money. Let's just say that they're making a lot of money. And once you have Apple product, it's the ecosystem that it creates, right? It's this is sort of where the power of it is. I don't like what they do to me. I don't like the fact that, if I turn off iCloud, every day they'll notify me 3-4 times a day. The little pop-up in the corner, got to turn on iCloud, got to turn on iCloud, you got to turn on iCloud. Did you turn on iCloud? You got to turn on iCloud. Do you want to turn it on today? How about now? How about now? How about fuck off, okay, with the iCloud shit. If you turn on iCloud, then they say, oh, you're out of space. Do you want to pay? No. You're out of space. Do you want to pay? No. You're out of space. You want to pay? No. 3-4 times a day. And they won't leave you alone. And I think they wear people down to the point where, fine, here's $20. Go away. Please leave me alone. Just to get it over with, right? So there's that side of it. They are bloody annoying when it comes to that. What I like about what I have is the ability to move. I have 1, 2, 3, 4. I have 4 Macs in this house, and I can move between all of them on one system. 2 iPads. I can move between all of them, 2 iPhones. I'm in a dead zone here for cellular service. So when my iPhone rings, I can answer it on this computer, that computer, that computer, that computer, this iPad, that. I answer it on my iPad. I'm on Wi-Fi. And it just happens that easily when everything is connected. And I have no problem with the other side hearing me. So I like that ecosystem. I like the way it all works together like that. It is a superior operating system to Windows, that if you had to get a desktop, your choice is either Windows or Mac. It is a far superior operating system. So I think Apple keeps going. I think Apple has some issues in the way that they use their power, and I think that's gonna hurt them at some point, especially the App Store. I think that's gonna hurt them. But overall, I think they're okay. Swipe right to match. Okay, well, it's right. Yeah, because if you swipe left, if you're a lefty, you go straight to hell. That's why you swipe left to get rid of them, right? That's what the church used to believe, right? They used to force people who were left-handed to right-handed because left-handed people were a sign of the devil or something like that. Did you stop doing weekly CFA stuff? Yes, I did. Yes, I did. How can we verify the tech stock market is in the bubble now? You can't. For example, are there any numbers that we can look at? No. A bubble is only a bubble after the fact. Before the fact, it is an incredible investment opportunity. I mean, in 1999, the internet was new and exciting and big, and the stories each day kept getting bigger and bigger and bigger, and you couldn't refute it because you had no counterfactual, because we'd never had this before. So it wasn't that it was a bubble, it was that the opportunity was so large, it was so big, that if you had first mover advantage and you had the eyeballs, the sky's the limit. That was the story. So that's not a bubble. That is a rush to get in and be first. Only after the fact, when we saw that, well, hang on a second, most of these companies have no revenues or no clear path to revenue or cash flow. They got lots of eyeballs, but there's nothing there. That's when it all starting to fall apart. You don't know you're in a bubble until after the fact. Are you still on your GME trade? No, I closed it because it was purely a gamble. I said it when I did it. This is just a gamble, because they do have $3 billion. They haven't said what they're going to do with it, so there's hope. That hope will stay alive for a while, but in the end, I don't want it put to me. I don't. I made money on them, and good enough. Move on. IV has dropped considerably. Yep, it did. Still hyping about selling. Yeah, I got out. What do you think about quantitative strategies? I think you said that fundamental investing is the only way to invest. That doesn't mean you can't be quantitative. You can still have a quantitative model that uses fundamental data. Quantitative just means you're looking at it quantitatively. That does not mean it's technical. It could be a quantitative fundamental strategy. For you people out there who are viewers of The Boys on Amazon, can I offer you a Fresca? Only if you watch that show will you understand that. But yes, I drink Fresca. My MM package is for CFA Level 2 2020. I'm sitting for November. Can I upgrade? I don't own the business anymore. I can't answer that question. Use support@markmeldrum.com. I don't know. I don't know. Have you stopped doing it? Okay, there we go. Did you receive your Apple Vision Pro? No, because it doesn't start shipping in Canada. I think it's still, I think you could pre-order, but it doesn't start. Is it July 12th or July 28th? It's not shipping yet. Only pre-orders. So no. Do you feel like this is a high probability of becoming where personal computing is headed? I don't know. Not until I put it on my head am I going to figure it out. If you had a good amount to exchange, you know what I'll do when I get it? I'll wear it through the whole thing and I'll see if it has any augmented stuff that I can do. What I'll try to do is I'll try to get YouTube inside the Vision Pro and see what it looks like inside there. And if I can do my live stream from inside there and see it that way, maybe I can look all over the place and I can still see you guys. Maybe I could just walk around the house and do that kind of thing, and I can go anywhere I want. I don't know. We'll see. We'll see. Maybe I might not be restricted to sitting in front of this computer. Maybe I could just go to the bathroom while I'm talking to you guys, hang out there for a while, and do some laundry and scroll. I don't know. It'll be. We'll see. We'll see. If you had a good amount to exchange, better to do it IB or the bank. IB. IB, hands down. IB, 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 hands down. Any opinion on current politics in France? I think the right won. I think the right won. But I don't know that you would expect anything else. When the pendulum swings, it swings, right? If you go too far one way, you don't go back to the center, you go the other way. And it takes a couple of times before you finally settle in the center for a while. And let's just face it, I mean, we've had some pretty wild pendulum swings in the last 10 years, primarily globally to the left. So, you know, when you tell a group of people, well, you don't so much tell them, but when you lecture to them for a period of time, it's never going to end up well. Have you seen The Fall of Usher House? No. It's based on Poe stories. Well, yeah, The House of Usher is a Poe. I think it's a short story. What if Tesla has huge technological advantage versus GM or Ford as company created from the beginning with new equipment, robots, and all production technology created from zero is not the same as rebuild? What if Tesla has huge technological advantage? Well, they're not showing it. They're certainly not showing it. In JD Powers, it's, I think, a number of years running, Tesla ranks, I think in 50 cars, is always in the 40th in terms of quality. They don't have a good reputation for quality at all. So I don't know if they have a huge technological advantage. They're not showing it. They don't have a level 4 anywhere. That would seem to me where you would go, right? If you look at Tesla's original strategy, start with a high-end vehicle to create a halo effect, introduce a middle market vehicle, then introduce a mass market vehicle. So he's done the first two, hasn't got a mass market vehicle yet. If you're going to do robo-taxi, why not follow the same playbook? Introduce a higher level robo-taxi, get a halo effect, and then introduce it into the fleet so that you have your whole fleet driving around collecting all this data from all over, but then have a level 4 that is geofence that starts collecting all of that micro data and meet in the middle. I don't see that they're doing that, so I don't know that they would have this advanced technology that is that great. So I would reject the assumption. But what if you're saying they had this huge technological advantage versus GM or Ford? Well, the world is not just GM or Ford. It is Mercedes, BMW, Volvo. Well, Volvo's owned by the Chinese now. Toyota, Honda, Hyundai, BYD, NIO, XPeng, and I'm on and on and on and on and on and on, with almost every car company having some feature that is much more advanced than what Tesla has. So it's not just GM or Ford. as company created from the beginning with new equipment, robots, and all production technology. Create from zero is not the same as rebuild. I don't know what you mean by it's not the same as rebuild. I don't know which side of the argument you're landing on that one. Tesla's never had to compete for its market share all the way up to the pandemic. It never really had to compete, and no one really was paying much attention. Pre-pandemic, you didn't really hear a lot about companies investing billions and billions to EV. Oh, EV was on their radar. They were starting to move towards that, but it wasn't a feeding frenzy. And Tesla was not, let's keep in mind, it was not profitable. Even though it had no competition, it was not profitable. Tesla played the game smart in the beginning. They had a high-end car. And then whenever they were very good at giving their cars to Hollywood, so that they were well placed in different shows, that whenever there was the background was it was a successful family or a successful person with a nice big house, there was a Tesla there. So it created that, wow, I want a Tesla. It's all the rich people have it. I got to have one of these things. It's a rich person's car that I can afford, right? That's originally where they were. They had a lot of acceptance of that. I think it was a good move, but they were not a profitable company. There's a big difference between making a car and being profitable making a car. They weren't profitable. When the pandemic hit and supply chains broke down, you still had demand for vehicles, but you had no vehicles. So every car company suddenly could sell every car it could make. Then Tesla became profitable with big margins. And then everyone looked at those margins and said, I want some of those margins. And in they came from all over the place, and especially the Chinese. In they came and in they came. And they're going to keep coming in. Now they have to compete. And now they have car company margins. So it is questionable whether or not they'll ever be, if they can maintain, I should say, being a profitable company, now that they have to compete for their customer. They never had to before. Now they have to compete, but they've lost a lot of the halo effect. I think it wouldn't be surprising to see Tesla slip back into an unprofitable company. They weren't profitable up until the second quarter of 2020. They've only been profitable for a few years. As a car company, they are a shrinking company. Can't argue with that. They are a shrinking company, whereas all the other companies are increasing. Now, what I said 2 years ago was that while each company will have a small number of vehicles, it's not this company or this company or this company. It's the sum of all the companies have pulled up a chair to Tesla's picnic table. And their growth rates will be tremendous. GM grew its EV sales 40%. Tesla dropped 5%. Now you can point out, yeah, but that was a small base. Doesn't matter. It's the growth. It was 40% growth. It doesn't matter because that's 40% growth there. Look at the growth rate of all the other EV companies. Tesla shrunk because they now have to compete, and you have an option. And a Tesla vehicle, sorry, it's not an attractive vehicle. I mean, you may like your Tesla, but it's not an attractive vehicle. You look at it, you go, yeah, it looks like a 20-year-old Toyota Tercel. I mean, it's okay, it's all right, but it's certainly not an attractive vehicle. There are a hell of a lot more attractive EVs out there. And if I put you in a Ford EV, a BMW EV, a Mercedes EV, a Tesla EV, and I blindfolded you and I said, guess which one's the Tesla? You couldn't do it because they're all pretty much about the same. You couldn't do it. So I don't know that they're so technologically advanced. If they were, you'd be able to do it in a second. I remember in the 80s, they had the blind taste test for Coke and Pepsi. Can you tell the difference? I can tell the difference. I can tell the difference between Coke and Pepsi, especially the Diet Coke and Diet Pepsi. I can tell the difference. It would be interesting for all the really big Tesla fans with self-driving is to say, okay, we're going to blindfold you. We're going to put you in this EV, that EV, that EV. Which one's a Tesla? I bet you it'd be 33%. would be the correct number of responses, because they're all pretty good. They're all pretty much the same. Then put them in the back seat and say, okay, well, this vehicle is driving itself. Which one's a Tesla? And you put them in a bunch of self-driving vehicles, a bunch of level twos. I bet you a Tesla fan couldn't tell the difference. I bet you they couldn't tell the difference. So I don't see that they're technologically advanced on that. But I think we left that question behind, right? And any methods that we can project balance sheet without using income statement? How? How would you project the growth of working capital without knowing what the growth rate in revenues are? How would you project the growth rate in accounts receivable and the growth rate in inventory if you don't know what sales are? If you're targeting a certain inventory of, let's say, 18 times a year, which is a Walmart target, and you're projecting, where would you project inventories to go unless you projected where sales would go, right? Because you divide your sales, you divide your cost of goods sold by 18 to get your inventory. I mean, how would you get to an inventory forecast without knowing a sales forecast, right? I don't know that you could do it. Some things on the balance sheet, I guess your level of debt. You could have a rule saying, well, we have CapEx. Whatever CapEx we have, we're going to maintain a debt equity ratio of 60-40, 60% equity, 40% debt. If we have, if our plans are for $4 billion in CapEx, then we know we have 1.6 billion in debt, long-term debt that's increasing. You could probably do that without an income statement, but I seem to think revenue is everything. I don't know what you can do without a revenue forecast. That's everything, because your revenue and your expenses will determine your retained earnings, which determines your equity and determines the level of assets. Is that going to be in cash, or is it going to be in fit? Yeah, it would be hard to do without the revenue. Not impossible. You could do it, but it would be inconsistent, I think. Many people do balance sheet projections by using different line items from the income statement. Well, you have to, yeah. I think it should be the other way around, that we should project the income statement from using the balance sheet. Okay, let's say that you have inventory of $1 million and you're going to increase your inventory to $1.2 million. What are your cost of goods sold going to be? Right? I mean, you'd have to make up some number. It's easier to work backwards by saying, well, if the company is efficient and it's maintained an inventory turnover on average each year of about 18, we can expect it to maintain an inventory turnover of 18. Walmart tends to grow at 100 basis points more than GDP, so let's put revenues up. What's our forecast for GDP? Let's put that up. They maintain a certain ratio of cost of goods sold to revenues. You have your cost of goods sold. You automatically have your inventory number as a result of your cost of goods sold because of the 18 times. Doing it the other way around seems to me like you're pushing on a string without recognizing that, well, hang on, sales are not forecast to grow by the amount that would justify a 20% increase in inventory, right? I don't know that you could do it well going backwards. Assets and liabilities lead to future revenue. No, they don't. No, they don't. Now, you could make the argument that, well, you can always get your revenues higher if you had more inventory, right? If your inventory turnover is 30 times a year, well, then you're probably missing sales. But I wouldn't say that your assets and liability lead to revenue. If that were the case, all I need to do is borrow some money, buy some assets, and people would line up at my door, right? Does that sound logical to you? If all I had to do was build a balance sheet, I say, okay, well, I've got $1 million. Let's put 200,000 into marketable securities. We'll lease 4 vehicles, and I'll buy some maple syrup for inventory. There, people should just show up. I have assets. They're not showing up. Maybe I need more liabilities. Let me go get a bank loan. Oh, now the people are showing up. See what I mean? It doesn't make sense that assets and liabilities would generate revenues, right? Revenues have to show up. If there are no revenues, then everything else is just a waste of time. Isn't a drop in CFA registration a consequence of CFAI's massive increase in pricing? Yeah, some of it could be that. If most of the 2010-2019 growth is coming from China, India, the elasticity of demand will be high. Yeah. And it's, I think like anything, you can't have a regression with one variable. Registration rates is a function of price. It's a function of price. It's a function of perception. It's a function of a number of different variables. And you can hypothesize about what variables there could possibly be. But you'd certainly put price in there, but to know whether it's price, you'd have to include other variables as well for as best as you can measure them. Because if they have explanatory power, it would be the error terms would have something to say about that, so that you'd be taking some explanation away from a variable. Like if you only put price in there, it would appear to take all the explanatory power because you only have price. But yeah, it's never one thing that brings something down. It's usually a constellation of things, and the common element of the constellation is typically poor management. Sorry, CFAI, but at some point you have to say, I don't know what's going on, and I've said this a couple of times. I don't know what's going on with the thinking inside there, but I certainly would not be making some of the decisions they're making. I certainly would not be doing that. Wealth management and transaction team. My boss tells me I don't need my CFA and I should put the time on growing my business. I think I should do CFA. What do you think? It depends on how you see your role. Is this your career? Is this your career, or are you passing through? If it's your career, wealth management is more of a relationship, more heavier on relationship management than asset management or valuation and analysis. So I would say, yeah, you probably don't need it. Nobody needs it, by the way. Nobody needs it. It's a question of whether or not it's going to be useful for you. In some roles, it's not going to be useful, but nobody needs it. Even an analyst somebody who wants to be an analyst doesn't need the CFA designation. The designation gives you a structure to think about things, and it gives you a level of respect for the designation that you don't necessarily have to earn on your own. So if I don't know you, I know nothing about you, but I see these initials behind your name and I know something about the initials, the respect I have for the initials is transitive. It transfers on to you. If I say, oh, CFA, I recognize that. That's something. Then it transfers on to you. But if your client does not recognize what those three letters are, then they're probably meaningless to your client. To say, in the job you have, you don't need this. Let me give you an example of where you can ignore a statement like that. I'm a waiter, and I'm going to university, and my boss tells me, you don't need a degree to be a waiter. Like, focus on this. You don't need a degree to be a waiter. I would say, yeah, but I'm passing through. I don't want to stop here. I'm passing through because I want to do something else. This is just something I'm doing right now. So is wealth management your career? Are you home, or are you passing through? I don't know the answer to that. So. having it just for bragging rights, I don't know that you really want to go through all of that just for bragging rights. Any thoughts on the Chevron Supreme Court? Chevron Supreme Court and the implications for the SEC. Oh, yeah, I'm really not up on that. I don't really follow the Supreme Court that much. I've heard about the Chevron doctrine or something like that. I don't know. What business can generate high revenue in the short time, but margins are, in your opinion, what businesses can generate high revenue in the short term, but very low margins? A growth business early in its cycle, where it's spending a lot of money on its growth and its revenues are really starting to accelerate, but because it's still spending so much on its future growth, its margins suck. A company in a perfectly competitive marketplace where margins just are not that great, but has a brand that people think is neat and cool and fun, but are not really willing to pay a premium for. What's the sequence I should do before getting started to reach a level that I know what I'm doing for trading myself? It doesn't matter. The applied level has no order in which you can do things. I would you can jump from section to section. I would experiment and just follow where it leads you. I don't know that there is an order that I would say that here's the order to go in. Some bodies of knowledge, especially textbook knowledge, have a progression. You need to know this before you know this, before you know this, before you know this. And you can do that with formal education a lot, because it leaves a lot of the real world out. But the real world is complex with a lot of things that interlink with each other. So there is no progression as much as there is a circle. Is you learn a little about this, a little about this, a little about that, and then you keep coming back to different topics. When you come back to this topic, oh, I understand this a little bit more, and now I can see my way a little clearer for everything. So it's more like a spider web than it is like a trail that you walk down. Is there is no clear progression. It's more of a yeah, I'd say, a bunch of nodes. From each node, you can go in a bunch of different directions, and you're going to revisit each of these nodes multiple times over the course of your career, and they all build on each other. But it's, the real world isn't linear like that. What's your view on T? Almost $19. It did hit $19 at one point. We've taken a leg upward. Yeah, I'm still seeing upside with yields potentially coming down. Yeah, at this point, I think their next quarter is going to have to justify the price move up, which means we're going to need to see progress on their debt. We're going to need to see how well they've grown the fiber business, how well they've retained customers. The big one by far is how much progress they've made on the debt, because they do see it as a problem, and they are actively trying to get that debt level down. It's going to be slow, but they're going to get it down. So that's the big thing, is can their next quarterly justify what has happened? And AT&T, Verizon, and T-Mobile all report in the same week every quarter, and I don't think it's not this week, it's not next week, it's the week after. So we're a couple of weeks away from getting their quarterly. So at this point, I would say, given the price of where AT&T is, I think it's a show me stock at this point. It's like, show me what you've done, and if I like it, okay, your new home is 18 to 19. I'll start selling $18 puts. But if the market doesn't like it, it can find its way back to 17 very quickly. What does the inversion of real curve imply about the market? Is it the same implication as the par curve? If you think that there is pricing power in a particular company's cash flows, where if you had an upward sloping inflation expectation curve, but an inverted nominal curve, then I guess it would be a matter of what the real discount rate would be, not the nominal discount rate. You could have a condition where I have lots of pricing power, and if inflation expectations are upward sloping, that means in the future I can price my product higher. That means my cash flows are going to have a higher growth rate than the growth of the economy. And if you have an inverted curve, I think it would I think it would matter for the discounting whether or not you have what the real discount rate would be. Cash flows aren't really done that way though. In terms of a different rate for each cash flow, they're usually done based on a company's cost of capital, because a company is not a government, right? It is a company that has debt, has equity. If it has floating rate debt, it affects floating rate debt companies more than fixed rate debt. So high yield companies more than investment grade companies. Investment grade companies tend to have a fairly constant cost of capital. Unless they're issuing new debt, then that may change the cost of capital. But I think it would affect high yield more than fixed rate, because high yield tends to be floating rate more often, and especially non-market issued debt for corporations is almost primarily floating rate. XLU is a close second behind cap rate. What would make you start picking up some shares calls before a run up? I believe you bought TLT calls several months back. Why not here? I did buy calls. I did buy calls on XLU. I bought $70 calls for March. I just happened to finance them by selling $70 puts. I mean, but I did buy calls. Already did that. Is it meaningful to compare two stock markets index based on price point level? Someone compared India and Hong Kong markets, saying the Indian market now surpassed Hong Kong market. Oh, no. So I don't know. You're asking me to accept the lot here. I don't know what you're getting at when you say price point level. I don't know what you mean when you say price point level. And I don't know when what did you read that said the Indian market now surpassed Hong Kong market? Are you sure it was on price? Was it not on market cap? That would have been the better way to compare it, that the Indian market had a higher market cap than the Hong Kong market, which is probably the way you would compare it. Getting more handsome as the years go by. Well, thanks. I kind of disagree with that, but I'll take it. It would be better if it wasn't the Brian that said it, but a Cindy or a Heather saying that would have been nice, right? Heather from the gym. Question for you. I recently found out that some of my family members got caught up in the Iraqi dinar scam to the tune of thousands. What can they do? I don't know. Is there a regulator there? Oh, I don't know. I know nothing. I know nothing about any of that stuff. No idea. What do you think about National Bank buying Canadian Western Bank? Each Canadian Western Bank gets 0.45 National Bank. Canadian Western is trading $5 cheaper than conversion. Well, is there a potential issue? I know Canadian regulators have been very reluctant when it comes to bank mergers in Canada. Have been very, very reluctant to allow these things. So there might be some, uh, you know, yeah, we want to get together, but you got to convince the regulator. And they have been very reluctant in the past to allow these things. So that could be the risk premium for the bet. If you think that this is going to happen, yeah, pick up $5. But in the banking sector in Canada, because there's only 6 big banks, they'd be very reluctant to see these 6 banks get bigger. Opinion on Britain's new prime minister. His policies are similar to Biden with regard to green agenda and lax immigration, criminal justice policies. Well, I think I know what your opinion is. The thing about the British system that I've seen going way back is, if you think about the center, they don't have this kind of dispersion between left and right. They're kind of closer center left or center right, but you don't have left wing and right wing. So I don't know that for Britain it's such a big significant difference in ideology. I think they're both anchored. Both parties are anchored to the center and deviate from the center, as opposed to being completely unhinged from the center. So in Canada, the Liberal Party there's no such thing as the center for the Liberal Party. They're gone. Biden, I think in the beginning, they were more in the center, and then they just seem to, at least the stuff he says sometimes, just seems to drift left, like almost like he's tone deaf to what's going on, and he just says things almost in a lecturing way. I don't know that that's a good way to run a government, or to run a country that has a society and ideas of what it should be. I don't know enough about the UK to really know. You'd mentioned you were playing Oxy, or part of your thesis was it was a Buffett position. He keeps adding. Yeah. Do you track 13F filings? Not really. If you have, you'd have to track to get that. You'd have to track Berkshire on that one. If so, are there any prominent investors you may follow into positions? Not really, no. What percentage of your net worth has come from having a job? Minimal. Minimal. Why can't companies with a business model shares rental data with credit bureaus work in Africa? I don't know. Why can't they? I don't know. I know nothing about Africa. Lots of really oblique questions here. I know nothing about Africa. You recommend 60-40 S&P, I assume, due to efficiency frontier. Would you create cases where 100-0 and rebalance slowly, 60-40 is one ages? Yeah, if you're 25, I don't see why you'd have a 60-40. Go 90-10. I mean, you want to keep something back such that if the market dropped, you'd be able to buy something. When you rebalance, that's the whole point, is that you're not 100% in something, because if it drops, well, how do you rebalance? How do you buy more at the lower price? You don't. So now you got to wait for it to come back up. You can't buy more at the lower price. So you have a split. I think you'd probably only want to go 70-30 maybe, so that if the market does drop, your bonds should increase, your market drops, you should be able to automatically generate the cash within the portfolio to buy at a lower price. That is why you would have some money in cash-like stuff. Did you ever consider a career as a C-suite executive at a large company? Not really, no. Never considered it. No. Why not? I don't know why not. Just being a member on a team doesn't turn me on. I mean, either I run the show or I'm not that interested. So I don't play well with the other kids. You could say that for my report card. I agree with you. AI take for now, and for now, it's only as good as the data is provided. We'll see if AI can get to the point of true intelligence. It won't, because it is just code. It is just code. Unless you find a way to introduce biology to it, it is just code. It will do what code does. It may do some impressive stuff. It may have some really neat non-linearities in there, but it is, in the end, just code. And its non-linearities will be dictated by the data that it gets, not by it stopping saying, whoa, 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 hang on a sec. Now, I know the code says to do this, but I don't think that's right. Algorithms and code don't make up their minds for one simple reason. They have no minds. They have no minds, right? Make up all the analogies you want about a neural net. It's still just code. It's still all just code. So I don't think you'll get true intelligence. Is there any viable entrepreneurship paths for CFA? Seems like it's limited to consulting or asset management. Research. You could be the best at a particular sub-industry. So let's say that I wanted to start a research business dealing with nothing but apartment REITs in both Canada and the US. That, as far as residential REITs, I know it all. I know it all. I would sell my research for $6,000 a year. For a fund, I'm a cheap analyst. It only costs $6,000 to have me on. And I am more valuable to you as a hedge fund the more hedge funds I have as clients. Why? Because if I say this is good and you start buying, you need a catalyst. You need more people to buy than you. The more clients I have, the more clients that are buying, the more likely what I say will go up, will go up. And it only costs you $6,000 a year to have me. There you go. And there are, what, 4,000, 5,000 hedge funds in the US? How many do I need? 50? I got $300,000 a year, right? And then I could have a higher end service where it's another 6,000 a year, and I will give you, a 2-hour conference call on a Sunday afternoon or a Monday morning to go into a little bit more detail about what I see. Now you think, well, I want to invest in the REIT space, but I'm going to have to hire an analyst. But this guy's only $6,000 a year. And then this office REIT analyst is $6,000 a year, and this mall REIT analyst is $6,000 a year. I can have 5 analysts for $30,000 a year is all I'm spending. I can't hire 5 analysts for $30,000 a year. This is sweet. I'll take these guys. Now, if you're developing proprietary models, now you want to hire your own analyst. But if you just want, if you're saying, hey, listen, is there any opportunity in junior copper miners? Yes. Yeah, I'm the guy. Why? Because all I do is junior copper miners. That's all I do is junior copper miners. So of all the funds out there, I know which ones are going to lean towards commodities and mining stocks. And maybe you want me for that. Maybe you're a merger arb shop and you're looking for the next potential target for a takeout. Juniors are always a target for takeout. That's where I come in for $6,000 a year or $10,000 a year. And I could say to you, well, I have 87 funds. You think 87? That means when you recommend something, there's 87 funds that are buying. I kind of want to be in on that buying because all that buying is going to make it go up. It's the very buying that makes it go up. And if you're telling 87 other people, I need to be the 88, I need to know it when everybody else knows it, right? So, no, I mean, there, look at that. I just laid out a whole business model for you. And how many sub industries are there? So you start a business. You say, okay, well, I'm going to learn all about junior copper miners. And then in time, you say, well, I'm doing really well at this. Why don't I hire an analyst to do junior silver miners? And I'll hire another analyst to look at junior gold miners. And I'll hire another analyst to look at the lithium space. And pretty soon, you got 8, 9, 10 analysts working for you. You're selling subscriptions for, if you want all of your research involved, you're selling subscriptions for 24 grand a year, 30 grand a year, because the hedge fund could never afford to have that many analysts on for what they're paying you. Right? There you go. You don't have to manage assets, you just have to analyze them. And you can create your whole business model. And maybe you have ways that you can view what's going on with these junior miners. You have some interesting satellite data, or maybe you have some drone data where you travel to these particular regions and you know what you're looking for. How are they building out? You send the drone over and you say, okay, they're extending out the conveyor belt. They're building this. They're building another crusher. You make your notes on that. Okay, great. So much you can do. So much you can do. My God, it's absolutely endless, right? And it all starts with learning a little bit about a sub industry. So if you look at the sector studies, when I do a video for a sub industry, that video is meant to get you 80% of the way there. Going from 80 to 90%, I would say, is at least 2 more years experience. Going from 90% to 95, 96% is 5 years of experience. So I can get you 80% of the way there, which will save you a month of research, maybe 2 months of research to get there. But then it's years to go from that 80 to 90 to 95, 96%. And that is, when you're at the 90, 92, 93% in terms of, I know what's going on, that's where you start making money. That's where you can start selling your research. But you're going to have to give it away for free for a while. And then off you go. Or maybe you do something like some of these people on Seeking Alpha are doing. You have a Substack where you give away some free stuff. You have a subscription where people pay. There, you're looking more for the retail trade. You have maybe a paid subscription where you say, look, I'm going to give you my 5 best ideas every month, or something like that. And you do something like that. I mean, the sky's the limit on what you can do if you're creative, right? It's you just have to start thinking about all the possibilities. And you once you start running through all those possibilities, it's going to be hard to sleep tonight, because your mind will be racing about everything that can happen. Well, I like casinos, I like this, I like sports betting, I like alcoholic beverages. Look at all the sub industries I have. What do I really, really like? I like footwear. Wow, look at all the footwear companies. I like auto companies. I like just EV companies. I like new energy companies. I like utility. My God, it's endless. It is endless. How does that sound? Did I get you excited? But you could do that. Any thoughts on HR? I wouldn't touch it. Northwest Health? Nah. Northwest Health, I think, has, it's not a problem with Northwest Health. It's a problem with the clients. Here's the deal. A lot of these healthcare tenants are understaffed. And when they're understaffed, you have a cash flow problem, because you can't run 6 operating rooms. You can only run 3 because you don't have enough operating room nurses. So you can only run 3 instead of 6. You're not as profitable as you used to be. So if your REIT, like let's take a mall REIT as a good example, some of the rental revenue is a function of the revenue of the client. Well, that kind of sucks, right? When your clients are having trouble, so are you. HR, retail space. Put it this way. Unless it's an apartment REIT in Canada, I'm uninterested. I'm uninterested in any of the REITs, because if I had to pick one sector in the REIT space that would outperform, it would be residential. So why diversify across the other sectors for the cash flow? Not a very tax efficient dividend either, when I could just focus on what I think is the winner. Somebody's asking me what I'm talking about. I noticed so many 52-week lows in many sectors last week, like many food companies. Staples are having one hell of a time. You're absolutely right. That is an odd thing. A rising market would make consumer staples underperform, but not drop in price. So that underperform, meaning S&P's up 10%, staples are only up 6%, everything is up more. They would underperform. Same with utilities. In a rising market, usually interest rates are rising, they tend to underperform. That doesn't mean they drop in price, but you have staples dropping in price. That is a curious thing. That is a very curious thing. I don't know what to make of it, but yeah, the weakness in some consumer staples, is like, but why? If the economy is doing that well, the market's doing that well, yeah, you'd see consumer staples go up, but in an uninteresting and an unexciting way. They'd be great to sell puts on, but now they're better to sell calls on. It doesn't make sense. 6 months until my level 1 exam, watching your videos, doing your bank questions, and practicing standard CFA level 1 questions given. Currently doing one chapter every 2 days, aiming to finish the course in 5 months. Is this a good strategy? I'm going to give you the same answer I give everyone else. I don't know. You came up with it, so it must be a good strategy for you. Otherwise, you wouldn't have come up with it, right? Every course I've done well in university when I was there, I know what I did to do well. So if I hadn't examined something else, I wouldn't say things like, maybe I'll put in an hour a day while I listen to music and watch a movie. I'm not going to do any questions. I would never design a study program like that, because in no way in the past has that ever been successful for me. Which means if you're telling me that this is what you've designed, that what you've written on the screen, it must be what's right for you. Otherwise, you never would have said that. You never would have said, well, here's what I'm going to do. So it must be right for you. I cannot answer these questions. Here's my study strategy. What do you think? Well, I think you came up with what works for you. Somebody else would maybe come up with the same thing, maybe come up with something slightly differently. But the reason you came up with that is because that's what works for you. So yes, if somebody says, what do you think of this? Yes, I don't even have to look at it. Yes, if you came up with it, yes. But if you say, I found this on the internet, what do you think about it for me? I don't know. What do you think about it for you, right? How do I understand investing? Do you have an opinion on zero? Is that one of those funny questions that's got a pun in there? Do you have an opinion on zero? And I say nothing. I get it. I think you mean realty. No, I have no opinion on that. No. Sounds still good. You sound normal. No issues with the sound. Sound is perfect. Okay, well, I asked that a while ago. Where are we? 2.5 hours. We'll wrap up here soon. What do we got? 9:40, 9:43. Why was the pass rate for May 2024 59%? Yeah, that is a question. I put a video out with that question. Why is it? Is this an anomaly? Is it in response to something? Is it a trend? All you could do is come up with some hypotheses, but I don't have any evidence for any conclusion on that, other than it is interesting. That's all. Sorry for the out of context question. I'm preparing a level 3 February. Do you offer live classrooms like a boot camp before the exam day? No. I shouldn't say no. I don't. I'm not involved in anything like that. Now, it could be that Serify, because they bought it, has something like that in the works or is planning something like that and may announce something like that. I'm not privy to any strategy meetings. Why would they include me in strategy meetings, right? Um, I wouldn't know. Maybe they're thinking of that, but at this point in time, I could tell you I'm not involved in anything like that. In one of the ABR videos, you mentioned to start with 10Q, move to 10K, but in the other videos, you mentioned start with 10K. What's the best way of researching a company in an optimal way? If you have no experience with the company at all, well, let me back up. If you have no experience with the industry at all, you must start with the 10K. If you understand the industry, you may be able to understand a company's 10Q without all of the narration of the 10K. But the more complex the business model is, the more you'd have to start with the most recent 10K because it has a lot of explanation in there. The 10Qs are much more condensed and they don't have enough explanation. If you're dealing with a fairly simple company, a consumer staples company, for example, that sells a product. They make stuff, frozen foods or whatever, and they sell it. It's pretty easy to understand that stuff. Same with GM, pretty easy to you could pick up their 10Q, you could pretty much understand what they're doing. Revenues, cost of goods sold, staff, G&A expense, all the pretty straightforward to understand what they're doing. You understand what business GM is in. I mean, there's not a lot to figure out. Some companies without the 10K would be difficult to understand their 10Q, especially if you don't know the industry, because you think, I don't understand what, like utilities, you have to understand what some of those accounts are on the balance sheet, regulatory assets, regulatory liabilities. You have to understand what those are. Otherwise, if you don't know what they are, you look at them and go, I don't know what they are. And you tend to just ignore them. Can you talk more about the red pill? You got me. Other than a reference to the Matrix, I'm not sure what you mean by the red pill. Trade in for a Cybertruck. Yeah, insurance on what item? Insurance on Yukon Denali pickup truck. Finished BCom in finance 22, still haven't got a job. That could be a function of a lot of things. Let me list a few. You have nothing on your resume that's impressive. You have a BCom, but so does everyone else. I mean, BComs are common. So does everyone else. You have nothing that's impressive. You have done no extracurricular activities. You've volunteered for no nonprofits or no charities. You've got nothing like that in there. You have no athletic accomplishments on your resume. You have no interns on your resume. Your BCom is from a third-rated school, from a school that really doesn't matter. Maybe you're trying to get a job in a company where English is extremely important, and maybe English isn't your first language. Maybe you require your employer to sponsor you for immigration. I mean, I'm just going through some lists here. Maybe your resume is not impressive in the least. Maybe you're applying for jobs that are way out of your category. Maybe you're asking for way too much money. Maybe you're ignoring entry-level jobs because you have to move to another city and you don't want to move to another city. I mean, it's endless to say that I finished my BCom and I haven't got a job. A BCom is not, there is no obligation the world owes you that once you get a BCom, you're owed a job. You still have to get a job. So there is nowhere near enough information in that statement for me to come up with any kind of conclusion. If If you tell me I'm getting in the room, but I'm just not getting a job, maybe you're an asshole. Maybe when you're in that room, you come off as such an a-hole that everyone says, "Oh, not hiring this guy." Maybe you come off as a know-it-all, and you don't know anything. Maybe you're just not interesting. Maybe you can't talk about anything the company does or anything that the company is involved with in their industry because you've taken no time to research it. Maybe you don't adapt a cover letter for the job you're applying to. Notice I'm going on and on and on and on. I don't know. I don't know. But you're not owed anything. To say that I haven't got a job just because you have a degree, you're not owed anything. You still have to get out and land that job. What do you think about India heavy EM exposure for diversification? Going forward, yeah, I think India has to be part of everybody's portfolio. I don't know about heavy exposure, but exposure. Did your opinion on TD Bank change? Do you see value at these prices? Yeah, I think I do, but I would like to see another round of earnings. Let's just see what their charge-offs or what their reserves for bad debts are going to be, being that Canadian unemployment has moved up so much since the beginning of the year. The economy I think Canada, is more likely in a recession than not. So let's see what their loan loss reserves are going to be. Are you still considering selling TD puts? Yeah, it's on my watch list. Do you think BOC will be able to cut rates in July? The economic data isn't great. It's not great at all. So why would they keep it where it is? I think they should cut. But whether they will is different than what I think they should do. Long Tesla comes off as a spite trade. No, it doesn't. It's not spite. It's just recognizing that I've been playing it, that I've been thinking about it all wrong. It's not a spite trade at all. Let me give you an example of a spite trade. I don't believe in God. I think it's ridiculous, so I go burn down a church. That's spiteful. Here's what I'm doing. I don't believe in God, but I know people do believe in God. So I can make a lot of money by taking a bunch of water, putting in little tablets and saying that this is water from the Sea of Galilee, pretty much where Jesus walked. Who cares, right? Like, it's all made up stuff, but I know I'll sell it, right? I know I'll sell it because I know those people will eat that stuff up, especially the front of the tent Christians. You know, those guys at the front of the tent with the short sleeve dress shirts on, with their hands in the air and their Bible and what, they'll eat that shit up. I can set up a booth right outside saying that I've just been to the Sea of Galilee. I've tracked Jesus's footsteps all the way, and this is the path that he took out to the fishermen, and this is water from the Sea of Galilee. And I don't believe one bit of that. That's all bloody nonsense. But I know that they believe it. That's all I need to sell that water, is for them to believe it. Do you see the difference in that now? The second one is changing my target, saying this God thing is pure nonsense. I'm going to burn down churches too. Well, wait a minute, though. There's a bunch of people that believe in it, and I can use that to my advantage. The long Tesla trade is not a spite trade. It's using it to my advantage. It's saying, look, there is a large retail following in Tesla. I don't know anybody on a serious note, away from the market, away from the crowd, that would say this is an undervalued company or even a fairly valued company. I think most people recognize it as it's overvalued. And at this point in time, most of what they're talking about is purely aspirational and not really that strategic. But I think they also have figured out long before I have that that's not what moves the stock. What moves the stock is the belief that this stuff is real, that this stuff is going to happen. How else can you say something for 10 years and still have the faithful believe, right? It's like the Seventh-day Adventists. The end of the world has come and gone, what, 4 or 5 times? But it doesn't shake their belief that the end of the world is just around the corner. It's just around the corner, because there's always a reason why the last end of the world date was wrong. All right. So it is me saying, there is an opportunity to sell these people water from the Sea of Galilee rather than burning down their church. I still don't believe in God, but I know that they do. I still don't believe in the valuation for Tesla. I don't believe in it at all, but they don't care. They don't care, so tell them what they want to hear. Go long their psychology. That's not a spite trade. It's just a matter of saying, well, look, 40% increase, 180 to 245 in 11 days. You kind of would like to be in on that. You look at that, you say, that's a ridiculous, ridiculous move. And the reaction to the year-over-year quarterly sales, a shrinking company, yay, yay, it's a shrinking company. And Elon Musk got his pay package and is going to dilute, yay, yay, shareholder dilution, yay. Oh, and this cheering for, what are you doing? You have to understand, as I've come to understand, that do all the fundamental analysis you want, does not matter. It does not matter. No matter how big the book of science gets, you're not going to shake the belief of a lot of religious people. No matter how big the book of science gets, it doesn't matter. But you can make money off religious people. You don't have to believe their religion, but you can make money off them. So no, I wouldn't say it's a spite trade. It's just changing target. When sentiment turns and the day will come, yes, I know it'll turn in momentum the other way. Yes, it will. Yes, it will, which means you need to get out there and you need to preach. You need to preach, right? You need to say salvation is just around the corner. If you buy my water, you have to get out there and you have to use whatever platform you have to keep saying that this doesn't matter because it's not a car company. It's this company now. And if that fails, well, it doesn't matter because it's this company. And no matter what happens, it's actually bullish. Musk is playing a game with everyone. And they'll eat it up and they'll eat it up and they'll eat it up. Yeah, you're right. At some point, reality will set in. And you won't be able to get away with that anymore. But I don't think that that's going to happen before August 8th. I don't think that I want to hold this through earnings. I don't think I'd want to make a bet like that through earnings because I don't think earnings are going to be good. On the other hand, he did cut 14% of the staff, so he might squeak out some numbers based on that. I don't know. They don't really give guidance anymore. So it could be whatever it wants to be. And what did he say at the end of the week? Bill Gates better close his short position. He's going to get obliterated. Wow! Watch what happens. I think Tesla trades 24 hours now, right? So let's have a look and see what's going on with Tesla now. If it's, I think it trades on Globex. Let's have a look at where it is. And it's like almost no volume, but it does have a bid and an ask, and the bid and the ask is moving 249.18 to 249.20, so it's down $2.28, which isn't really that much. ES is, where is ES? Where's ES on here? ES is down. Where is my ES? Expired. Oh, they're expired. I gotta add a new ES. I can't see the market right now, so I don't know where it is right now. Bitcoin is down 2,200, so things are not looking good. Yeah, so it could just be down in sympathy with the market, but it's really not down that much overall. I think SPY trades all the time as well. Yeah, it's down slightly, so it's down in sympathy with SPY. But you're right. When that breaks, it's going to break. It's going to break once and for all, which is the dangerous thing about about this one, which is why I would only buy calls. I wouldn't buy the stock. I'd only buy calls. If I did, I don't know what I'm going to do with that thing. I just seem to think that there is some money to be made off the psychology of it, because there's no money to be made off the fundamentals. You're not buying this because of its incredibly great fundamentals. Which province in Canada do you think is the best for starting a finance career? Ontario. I'm a recent grad. Well, you know what? A finance career where you are subject to somebody else hiring you, Calgary or Toronto, and I think Toronto wins out on that one. Look at Mr. Money over here with his 3 pairs of shoes. 3 pairs of shoes with 1 vehicle in the driveway, right? My neighbor across the street, they got 4 vehicles in the driveway. They've got, the doctor across the street has 3 vehicles in his driveway. Next door, they've got, I think, 2 vehicles in the driveway. I mean, 3 pairs of shoes is nothing compared to the number of vehicles some of these people have. Yeah, that's funny. What do you think about AI? Sam Altman prediction that GDP could double in 10 years. Double in 10 years. 2 y to the x 0.1. 7, that would be almost 7.2% GDP for the next 10 years straight. Is he saying US GDP or global GDP? Global GDP? If he's saying that because of AI, you have to come up with some way that you're going to employ all the displaced people in a 10-year period. I mean, you've had growth spurts before. You've had technology come in, a little bit here, a little bit there, this industry, that industry, and you always created more jobs, always. But if you're going to get that kind of growth in a 10-year period where you're going to get 7% growth, it's going to have to be on significant productivity gains. What are you going to do with all the people who don't have a job? If you think that GDP has an identity with GNI, which is income, if output equals income and you take all these people out of work, who's going to buy all the stuff that AI is making? How is GDP going to equal GNI, right? So you got to give me a reason why new jobs are going to grow at 7.2% every year for the next 10 years. If you can't, then no, I disagree with that. I think that's easy, a rather easy one to dismiss. Historically, small cap stocks have generated tremendous outperformance when rate cut starts. What's your thoughts of overweighting small cap funds? How long have we been waiting for small caps to join the party here? They really haven't. Do we live in a world of large cap capitalism now? A couple of years ago, I said that we seem to be heading towards a world of large cap capitalism where the larger you are, the larger you get. Diminishing costs to scale, which means there is no optimal size of the firm at this point. We can answer the question that was put out 100 years ago is, if there are economies of scale, why is the economy not just one big firm? It's because of the costs to size. Well, with technology, there is no cost to size. So could it be that one firm can be the entire economy? And if that's the case, small companies are at an extreme disadvantage. So are we entering a phase of large cap capitalism and small cap companies are going to have a very hard time performing? I don't know. But one thing we do know is small caps do the valuation does favor lower rates. Small caps tend to be high yield companies more than investment grade companies, so they tend to have floating rate debt, so they'll do better as debt decreases, cost of debt decreases. Confirm your opinion on L3 books, assuming the regular PM pathway is still 452. Okay, so I'm not up on the what's in each reading anymore. I am slowly walking off the stage, right? I mean, it's been almost 2 years, 3 months since I sold. So I am tapering out as new voices are tapering in. It has to happen. So I don't know what's in book 4. I haven't looked at it that way. I don't know what's in book 4. So I don't have an answer for you there. Why did you have someone else decide to manage some of your money? Because I wouldn't buy any of the 8 stocks that make up 30% of the index. But my external managers will, but I wouldn't, but they will. So when I see the market going up and up and up, and I think, oh yeah, what's going on here? I'm doing okay. I'm doing okay over there. So it's going along for the ride on decisions I wouldn't make, right? So it is diversification of thought and diversification of strategy, because I don't have 4 people in here with me making investment decisions. It's just me. So it would be too much money concentrated in one particular strategy and one particular mindset. That's just too much. That's no diversification of thought. Do you have EM exposure in your portfolio? Oh, I'm absolutely certain I do. Would you consider doing some series on business and entrepreneurship? Curious to your philosophy and management style. I started with that. I was an entrepreneurship professor. I don't know that I would want to do that. I don't know that there's much there. Much of the textbooks and the literature in that field is, a lot of it's a bunch of nonsense, just a bunch of nonsense. So I don't know that I don't see much there. How many new videos of the CFA Level 3 content will be updated given the new pathways? I did all of the private markets. I did private markets. Private wealth, I'm not kidding you. I started and quit. Said I can't do it. I said, let me try again. I started and quit. Said, no, I can't do this. This is garbage. And I even tried the third time, saying, okay, let's just give it my best effort. I got through 2 readings, and then I got halfway through the third. I said, no, this is nonsense. This is bullshit. This is so poorly written, and I mean, I can't even follow this author. I'm done. So no, I had no expertise in relationship management. I shouldn't even be doing it, and so I just didn't do it. But I did the other ones. So the only things I didn't do is the private wealth at all. So I'm not going to be of much help in 2025 when it comes to private wealth, because it's I don't know, very poorly written. I work in auto. Tesla uses the same assembly suppliers as everyone else. Yeah. No different than anyone else in manufacturing. I agree. Do you have an opinion of solar manufacturers? No. Add a tag for an already watched video with the mobile app. That's not my thing. I don't own the app. I don't own the company. I would send that idea to support@markmeldrum.com. Opinions on dollar yen. Tough place. Rock and a hard place. What are they going to do? Right? Raise interest rates. Over time, their debt would become too costly. The lower yen is, they're an exporting country. The lower yen benefits them, although it hurts them on their imports, their energy cost. By intervention is short term and it doesn't work. It's a waste of money. Why would they do it? It's just a waste of money. The only thing they can do is either wait for the US dollar to drop significantly as interest rates drop and the interest rate differential would decrease. But you got momentum to the downside now. Other than punishing short sellers every now and then with intervention, you need something that is more long-term sustainable. I don't see that they have that unless they start significantly reducing their debt and bringing it in line. I don't see it happening. Almost done the questions here. Would it be possible? Okay, I already did that. Already did that. I'm going to scroll to the bottom and work up. Is British Columbia good for starting my finance career? Could be. I don't know. I don't know anything much about British Columbia. When taking mock exams, should you let yourself have a formula sheet, memorize them before? Well, if you start with training wheels, just make sure that by the end of it, you're not using the training wheels anymore, right? That you're not doing that anymore. Best platform to use to trade to invest. I use Interactive Brokers. I know you're not the biggest fan of Keith Gill. No, I never said that. I didn't say I was not a fan of Keith Gill. I just felt his last performance was. I just felt he passed up an opportunity there. I thought his last performance was childish for having $250 million on the line. That was just seemed to be childish. I wouldn't have made those decisions. I'll tell you that. What do you think of his recent position in Chewy? I thought he was on the cost now. Isn't he jumping around? Right? I don't know. I don't know what he's doing. I don't know if he's jumping from one to the next and looking to trade in and out very quickly and use, is he using the people who listen to him to his advantage? Is he helping himself or is he helping other people at this point? Once you start helping yourself, you can only do that for so long before the market, before whoever's listening to you figures it out, right? So I don't know. I think it's odd what he's doing. These big positions, jumping around with these big positions on companies that. Why these companies? I mean, if you're really looking to do something, look, you've already won. I mean, if you've got that much money, you've already won. I don't know. I just wouldn't be making those decisions. Now that you've lived in Costa Rica for some time, what aspects of Canada do you miss and would you consider moving back? I would not consider moving back. It's the tax rate. Once I'm done doing what I need to do, I will consider moving back. What aspects do I miss? The roads. The roads are nice to drive on. The culture. I don't have to keep worrying about, well, let's just say the culture. I don't have to keep worrying about the culture. Access to product of good quality. And there's nothing of quality in Costa Rica, by the way. If you want something good, you have to order it from Amazon through Miami and have it brokered in by a company. But most of what you buy in the stores in Costa Rica is low quality. Also, people showing up. People actually showing up. They show up when they say they're going to show up. That doesn't happen in Costa Rica. Somebody says, I'll be there Monday at noon. What that means is I'll be there. I will not be there before Monday at noon. That's all it means, is that don't expect me to be there before Monday at noon. But that doesn't mean I'll be there Monday at noon. I just won't be there before. At some point, I'll show up. That's what it means. So nobody shows up. And when they do, what I've seen about the country is it's a lot of people uh, that for the most part have no clue what they're doing. If you want to be a plumber in Costa Rica, all you have to do one day is wake up and say, plumbing. I'm going to be a plumber. And you're a plumber. And you're a plumber. That's all you have to do is you just say, I'm going to be a plumber, and you're a plumber. And that's it. What I find in Costa Rica is and this goes for almost every profession I bumped into, it's a lot of less than average people, like people reaching up to be average. I used to hear that it's a country for, oh, you can get great medical work done there. I would not have anybody touch me in Costa Rica, not after what I've seen. A friend of mine asked me, if you needed to see a dentist down here, what would you do? I said, I would get my toothache on a plane and fly back to Canada or fly to Miami. I would not let anybody here do a damn thing to me in this country, because it's just a lot of people who have no idea what they're doing, and they barely show up, and they barely even do halfway a decent job. You need to have the same thing done 8 times. It's I miss that. I miss the fact that when you call a plumber, there was somebody who said, this person's a plumber. I miss that. But to pay some 56% of my income, and that's even before you start considering luxury tax and property tax and sales tax and the capital gains inclusion, that's before all of that nonsense. You're at 56%. To be a minority interest in my own life, to be a horse on this animal farm, no thank you, no thank you. I'm willing to put up with that than this. And you take on Dream Unlimited. They have I think they have an office REIT, and they have an industrial REIT. Yeah, they have a dir.un is the industrial REIT. I think that would be okay. I think if I had to have exposure to it, I'd be underweight the office, significantly underweight the office, but the industrial REIT I think would be okay. I'm trying to find one last question here. What are your thoughts on Gary Stevenson and his belief that the world economy will continue to decline until the super wealthy are taxed on their assets? Well, the world economy is not declining. It's not declining, and it is the very act of producing growth that creates wealth. So, I mean, it's not as if the wealthy pre-exist everything and they take everything away from everyone else. It's the idea that you can engage in capitalism and create something that allows you to move into the wealthy, right? I mean, the turnover in the top 10% is incredible. Nobody ever talks. It's not some monolithic top 10% that never changes. The turnover is absolutely incredible. If you look at the top 10% today and you look at it 20 years ago, it wouldn't surprise me if you have 70% turnover in the top 10%. Now, does that sound like an economy that you don't want to be part of? Oh, too much wealth inequality. Yeah, but over the course, if you take just the U.S., over the course of everybody's life, there are some 30 to 40% of people who have been in the top 10% at some point in their life. Right? That does not sound like you need to punish the top 10%. That sounds like a system that's working, right? You get to the top 10% and you can lose the top 10%. You don't get to stay there. You can lose it. If you don't have the top 10%, you don't have investment. You don't have donations to museums, to libraries, to hospitals, to universities. You don't have any of this stuff going on. You don't have employment. If you, let's just take Elon Musk, for example, when he got out of, I believe it was PayPal, if he wasn't allowed to keep any of that, he wouldn't have had the money to start Tesla. You wouldn't have it. You just wouldn't have it. So this idea of punishing people who have been successful, that's the wrong thing to do. I think your tax rate should be progressive up to a point, and then after that, they should be regressive. That if you are earning $10 million a year because you have this business, you employ a bunch of people, I think that your tax rate should get lower the more you make. That, okay, well, your marginal tax rate is 40% up to 10 million. The next 5 million, it drops to 35%. The next 5 million, it drops down. As long as you tie it to the level of investment that you make or the level of employment that you have. But I think you should be rewarded for being the horse, right? What happens when you start taxing successful people is you end up with a farm with too many pigs and not enough horses. Horses can leave. I left. Many people left California. Many people left Illinois. People are leaving New York. People leave because we have that world where you can leave. I would be very careful about how much you want to punish successful people. If we're going to punish successful people who are financially successful, why stop there? Why not punish people who are musically successful? You have too many hit songs. I'm sorry, I've got to take some of your hit songs and give it to these artists. You've got too many of them. Why not publish literary success? Sorry, J.K. Rowling, you cannot have 9 great selling books. 7 of those are going to have to go to other authors that have no best-selling books. Why do we just look at financial success and say, no, you cannot have that? Let's go to Michael Phelps and say, you've got way too many gold medals. I don't have any of them. How is that fair? How is that equitable? Give me one of his gold medals. Please give me one of his gold medals. I mean, I think it's a ridiculous statement. This belief that you can tax your way to prosperity by simply taking from people who have it and giving to people who don't. What you create is more of the very things that you give money to. You create more of that. And you take away from those that otherwise would be successful. Why would you want to punish them? Why would you want to give them any reason to leave? You want to give them reasons to show up, not to leave. So obviously, I don't agree with that. Obviously, I don't. Now, if I were poor, I would be all on board for that. I'd say, yeah, tax the hell out of them because it doesn't affect me, right? There's the NIMBY attitude. Not in my backyard. You want to tax people, make sure you tax them. Tax them, not me. They have a lot. They have a lot more than me, and there's a certain sense of, self-progress that comes by seeing other people more successful than you brought down. You like to see that because it makes you feel better about where you are. But does that mean it's a good thing? Right? I think it's all backwards. I think you need to reward your horses, and your horses should get a better place at the table, and your horses should be first to eat. Because if it wasn't for the horse, you wouldn't have any food, right? So obviously, some of you might be saying, horses, pigs, what are you talking about? I'm talking about George Orwell's Animal Farm. If you haven't read that book or seen the little animated cartoon on YouTube, Google Animal Farm on YouTube. It's a half-hour little animated cartoon that is true to the story, but gives you sort of the idea that poor horse. You have to decide very quickly, when you're moving that way, that you will not be a horse on that farm. And why would you treat the horse that way? The horse should have been treated a lot better, but it wasn't. The harder the horse worked, the more everybody else thought they didn't need to work. because they were getting things. Then the horse had to work harder. He was made to work harder. And then you had more animals not doing anything because the horse was providing everything until the very end when the horse, well, you got to read it. So no, I think he's an idiot. I think he's an idiot. I think anybody who says that is simple-minded and is just a general idiot. And if they're not, if they're educated, then maybe they're saying what they're saying not because they're an idiot, but because they want something and they think you're an idiot. Right? Like Elizabeth Warren. She's an intelligent person, but she says stupid things. But not because she's stupid. She thinks the voter is stupid, which makes her a rather despicable human being. All right. Let's wrap it up here. 3 minutes, 9 seconds. We're at 10:24. That's it. That's it. I'm out of here. Till next Sunday. Next Sunday, I'll have air conditioning. My air conditioning doesn't work. I can't get it to go below 23 degrees. It's leaking refrigerant, and because of this thing called R22 or something like that, they can't refill it. You can't do a $500 repair. You have to do an $8,000 replacement. Welcome to Canada. All right. If you see my forehead a little bit shiny, it's because it's hot in here. It's like 25 degrees. All right. I'm done. Ciao.